According to preliminary plan, Angola to ship 1.07 million barrels per day of crude in June. Take a look at the Philadelphia Semiconductor Index, now down 3.7%. $10 away until we get the Bank of Canada rate decision. Forecast is for no change prior to 2.75%. We also get the Bank of Canada monetary policy report and the rate statement. A reminder, later on at 10:30 a.m. Eastern Time, we get the press conference with Bank of Canada's Governor Macklem. Did see Alibaba down 3.1% and Baidu down about 1.4%. So again, US listed shares of Chinese firms fall, tracking a decline in mainland peers over trade war jitters. 5 minutes away from the Bank of Canada rate decision. Forecast is for no change prior to 2.75%. We get the monetary policy report and the rate statement as well. One minute to go now. Ten seconds. No change, no change. Rate remains unchanged at 2.75% as expected. Bank of Canada says that we will support economic growth while ensuring inflation remains well controlled, and it expects tariffs and supply chain disruptions to push up some prices. Major shifts in US trade policy have increased uncertainty and cut prospects for growth and raised inflation expectations. High inflation in the last couple of months reflects some rebound in goods price inflation and end to temporary suspension of sales tax. Starting in April, inflation will be pulled down for 1 year by removal of consumer carbon tax, and lower oil prices will also dampen inflation. Forecasts for economic growth and inflation are of little use as a guide to anything. Data are increasingly pointing to a considerable slowing in business investment and household spending. Macklem says total CPI inflation expected to be about 1.5% in April. Elimination of consumer carbon tax will cut CPI inflation by zero point 0.7 percentage points for a year. Macklem says Q1 annualized growth is forecast to be about 1.8%, and Q2 growth will be much weaker. If we find ourselves in a protracted trade war, we will see opposing forces on inflation. Just keep an eye on the Canadian dollar, seeing a little bit of seeing some strength off the back of the rate decision. The Bank of Canada's monetary policy report does not provide economic forecasts and cites uncertainty generated by US tariffs. Also, Bank of Canada releases two scenarios on what could happen. First scenario envisages most tariffs being negotiated away. Second scenario sees long-lasting global trade war. Also, in the first BOC scenario, Canadian and global growth weaken temporarily, and Canadian inflation falls to 1.5% for a year, then returns to 2% target. Second Bank of Canada scenario sees sharp global slowdown and increase in inflation. Canada enters significant recession and inflation rises above 3% in mid-2026 before returning to 2%. And in both scenarios, nominal neutral interest rate is estimated to be in midpoint of a 2.25% to 3.25% range. Many other scenarios are possible. So, in regards to the annualized GDP Q1 estimate, seen at 1.8% compared to the prior estimate of 2% seen in January. And Bank of Canada estimates that Q1 2025 output gap was between minus 1% and 0%. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. Canadian swaps markets see 67% chance that the Bank of Canada remains on hold in June. Also seeing Canada's 10-year yield rising 1.8 basis points to about 3.130% after the Bank of Canada keeps rates on hold as expected. Swiss government says 2025 growth will be weaker than 1.4%. Also seeing Brent crude futures rising more than $1 a barrel on potential for US-China discussions and Iraq output cut plan. Also the same goes for US crude futures as well. Swiss government says 2025 GDP to be subdued, but the economy won't collapse. And that's Swiss government citing US tariffs as a reason for weaker growth. We have posted out the Bank of Canada Monetary Policy Report and the rate statement on the feed for you to read through. So as a reminder, at 10 a.m. Eastern Time, we get the US NAHB Housing Market Index forecast 38 prior 39, and business inventories forecast 0.2% prior 0.3%. So we'll lead with the business inventories. So let's on minutes go now. Ten seconds. Zero spot 2%, 0.2% as expected. NAHB Housing Market Index 40, higher than the forecast of 38. Protect. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Be on in just a minute, guys.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Check 1, 2, mic check. I'm here, guys. Give me a few minutes. I gotta one quick thing I gotta do here. Just give me a few minutes. Is the squawker on? Hang tight here. I thought I got here earlier than 11:30, but I guess I didn't. 11:22. Whoa. Just a heads up, this morning I bought, yes, I got annihilated in some calls that I was in. I was in 100 calls. 546 for Friday. I added this morning 200 more calls. I was in for 218. I added this morning for 40 cents. So I'm in for like 99 cents right now, just as a heads up for an update as to where I am. Give me a few minutes. I got to line a few things up here to talk about. Last night at 6 p.m. Well, first we had ASML got annihilated yesterday. in their earnings. And then around 6 p.m. yesterday, we had Japan came out and said they were likely going to make cuts. But of course, afterwards, we get the drop on NVIDIA chips, and we get the noise about 245% tariffs on China. And China, like tit for tat, also came out yesterday with, I think this was yesterday. I'm just want to make sure I get my facts straight here. But instead of just banning specific rare earth minerals, I guess they're banning all. Now, I got to confirm that last part there. But what I was led to believe last night was that instead of just some rare earth metals, they're banning all rare earth metals. Now, yesterday, into yesterday's close, we had a good retail sales this morning, by the way. And you could see the market being dropped last night. And I'm like, do I assign this to news or not? And at the close yesterday, we talked about dropping the market down in the overnight, regardless of news. It was almost like manufactured news to some extent. We like, it's almost like they knew retail sales would be good, and it didn't matter what whatever the news they're going to make up to assign. Now, also, we probably have some option mechanics involved in this. That's my assumption here. So we should still trade 560, like no matter what they're doing here, whether it's parking the bus yesterday, parking the bus today. I think we just wait 560, 562, and murder options as best they can. I expect ramping. Let me go over to this trigger screen here. So this would be here and up. We cranked down in the overnight, but it doesn't make a difference. We're going higher. We're going higher. We're going up here no matter what. So whether it takes today, tomorrow, weekend, I'm assuming at this point they're going to try to ramp this into tomorrow, and then they'll try to ramp the rest of it over the 3 days that the market is closed to not pay options. But this is the way right here. There is no downside move here in the market. So this has to be more option mechanics than anything. I was in calls for Friday for 546. They cost me $2.18. I went in this morning and bought 200 more for 40 fucking cents. And I'm just like, you got to be kidding me. Like, I just got hammered on call premium this morning. So, and these are for Friday. I don't have Mondays. So I'm a little concerned because 46s are right in here. And we need to hit this into the close on tomorrow. So, I got to get $1 at least to break even. And I don't think we get the 60 until possibly Monday now. It's just murder the chain, get the price where it needs to go. I don't think that the way is lower. I checked yesterday. At one point yesterday, I thought at one point yesterday and even last night, I was thinking, we get down here, we're going to blast down to 500. But I just don't see it. I don't see anything that could send us back down there until we reject this old man group up here. We have to hit this no matter what. We're already up here. We're told we're going higher here. We haven't blasted down since. I know that you want to get out here. This yellow bar is where you've got like, I don't know if you can understand the idea behind this, but people have to get long back here. They have to chase price, and all they want to do is sell back down to where they got trapped in there. So I realize that we're going to come back for this, and I fully believe we're coming back for this, but I don't think it's right now. Maybe Monday, unless they do it all today and tomorrow. So either time or price, we're just waiting at this point to go higher. And I can't tell if we do the 60 close on Thursday or if it's Monday They wait for the weekend and pump us up into Sunday futures. That would make sense too. You get like the 3-day weekend, holiday weekend. They ramp it up. We wake up on Sunday and we're up here at this 62. But I don't see any other answer here other than going up. As a matter of fact, we're almost right back. We're just below right now. This is 535. But for how much we're ranging, we're close to yesterday's close. So this to me is all bullshit, fake fucking futures, murder the chain kind of action right here. And the way is higher. The only way that I could see us, let me see where SPX is. SPX is trading lower than, so this here, let me go show you XPX really quick. So yesterday we talked about this band right here. This was the 540. And this was the band we talked about Monday at 1:30 in the afternoon that they would sweep us. I was like, maybe they'll sweep us low here for a minute. And then yesterday I was like, you know what? They might take us all the way down here in the overnight. And we had good retail sales today. Retail sales were, all in all, a really good report, relatively speaking. But we have some other mechanical issues here. And this is what I want to go back to, which is the Trump bombs. Yesterday, he had a presser, and he dropped bombs. And yesterday, they highlighted again the 245% tariffs on China. I'm going to read some of this stuff to you here this morning. China faces 245% Trump tariffs. Think tighter. The White House said, it's like more goddamn Trump bullshit, like literal market manipulation. I want to say something on this too. I was having a conversation with a friend yesterday, and we were discussing the but we were discussing at 73 at the end of the quarter and how we sold it. We got the DivX, and then it was a sell, right? And we were discussing yesterday who is going to believe in this market. So we were discussing trading 60 and 62, and there's something different about. We were discussing like relevant to Trump 1.0 versus Trump 2.0, and a key difference from COVID to today, a key difference in this Trump 2.0 and Trump 1.0 was when we marked the bottom in COVID. Jerome had come out and done like a couple I think he did like 2 emergency pressers, 1 or 2. And then he showed up at 60 Minutes on a Sunday. And the world kind of came together. We did one more big back check. And we moved higher from there. We started just cranking. And I remember the back test that we did. People thought that we were going to blast down lower. It's very similar to this price action. Let me see here. It's very similar to this price action. Go over here. Nothing's changed here, by the way. It's very similar to this price action. We got a bottom in 2020, and then we got this like presser, and we still rolled to the downside and checked. And I remember that everyone at that time had said, we're going to keep rolling, that the Fed's not going to help. And we actually bounced, and we just grinded sideways and up. It was brutal. And it was like this big, big grind, and it just didn't stop. I don't see how this is the same. So we were discussing this yesterday, and my only fly in the ointment with this, if we get the 62 on the back side of this trade, is there's a marked difference, and I can't tell if it would be sentiment driven. And the fool me once at 73 mark, I think there's going to be a lot of panic here. Fool me once, fool me twice, fool me 3 times. And then the next question is, does anybody buy in, even if it's a slow grind to the right or anything like that? Now we could squeeze monster, but that if it's just squeezing, it's not permanent. If you've got, you got to think about where we are right now with investments in the U.S. You can see it in the bond market, right? No one's wanting to buy bonds. Bonds are blasting down. We're trying to drop the dollar to pay off the debt. Blah, 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 blah. But the sentiment out there from investors, from foreign investments, you name it, is in the shitter. And I don't know how you, on a dime, change that sentiment. Unlike COVID. The weird part about COVID was that everybody bought in. And that was a key point about COVID, was the buy-in. I want to say it was a really weird thing. Everyone was like, yeah, we're going to band together and we'll be fine with shortages, and we'll be fine with this, and we'll be fine with that, and we'll kumbaya and all that kind of stuff. The Fed's got our back. Treasury's got our back. People are angry about it, but all in all, there was an air of tension that was palatable before that moment, like that week that took place. You could strum a string, like it was like you could hear a pin drop. The stress that the world was in, but then all of a sudden there was a sense of relief. Yeah, we got this. Don't worry about it. Don't worry about your mortgage. Don't worry about your college loans. Don't worry about school. Don't worry about money. We'll just start printing. The whole world will start printing. And we'll print our way out of this. You recall any of that? We opened up the corporate debt facilities. It was corporate debt bonds. You name it. We did it. And I don't know if that's I don't know how you manufacture that in this instance. So for some kind of a sustained recovery, unless it's just straight squeezing. So I'm trying to figure that out in my head here, which is like, how do you get a sustained price movement? And the scary part about that is when we get to 62, you're going to get a second round of you're not going to fool me twice in the marketplace. So that's really concerning. And I don't think, I could be wrong here, but I don't think you get, like, no matter what your politics are, what your beliefs are, and things like that, the general feeling and idea everywhere is do not invest in the U.S. stock market. Point blank. You can't candy coat it any other way. So I was talking to a buddy because we're both own SPY. I own 400 shares of SPY right now, and I got friends that own more than me, tons more than me. But I have polled 3 different guys, and I got 3 different answers from them. And if we're going to stay committed to an economic or changing the economy of the U.S., I don't see how you could. Or I don't see how indexes are where you invest. I can see single stocks, single issues and things like that, single symbols, but not indexes. They should underperform in general for a significant amount of time. Even though I'm reading, like last night I was reading this one article last night, and people were like, "What's the U.S. going to do? Build factories? It's going to take them years." And I'm like, these people have no idea. Like, people are in the dark as to what's been going on. If you check the Fed website, they've been cranking factories out since COVID. There's been like an under the cover, under the surface even though they said, "Oh, we're going to wait, push it off a couple of years until we get Trump depression trade." Underneath the surface, not in the news. If you just check the data, they've been moving towards this economy change for years now, since COVID. I posted this for you in the Discord. It was a Wolf Richter article that showed the Fed data on those factory builds. So I'm trying to, like, in my mind, figure out. In my mind, I'm like, well, if you're not going to get that sentiment shift, and if Wall Street's fully aware of this, Wall Street's in November, JPM's outlook and GS's outlook, front page, first page, said we anticipate Trump 2.0 tariffs, and we're likely in 1927, I think they said, 7 or 8. We likely have 2 years of Trump tariff 2.0, but the back half of his presidency, watch out. And this was a universal thesis here. We're going to push off the recession and the depression until 26, 27. And of course, we don't get that, do we? We get Trump, not 2.0, we get Trump depression trade out the gate, first 90 days. And I got to give it to him because, in all honesty, if he had waited for the last 2 years, there's a chance he wouldn't have gotten it done. So speed running this, I got to give him props for this because he only has so much time to get it done before he's either lame duck, he's tied up in the House or the Senate. So this is speed run. And my real question here, too, is it's not just sentiment. It is Wall Street. Is Wall Street saying, you know what, we'll return to the scene of the crime. I'm reading something here that says, let me read this to you here really quick. Trading desk commentary. Bottom up upside. Goldman's single stock analysts' price targets imply a 21.8% upside over the next year. This is the safe trade. Like, hey, yeah, we'll make 20% this year on average, bro. And we'll call that every year until we're in a bear market. But just listen to this. Single stock analyst price targets imply 21.8% upside over the next year for the weighted average of the S&P 500 companies, while consumer specialist Feeler is puzzled why consumer stocks are struggling so much. Puzzled. Even when the market is doing well. XRT was down another 1.6 yesterday, underperforming the market by 150 BPS. The group is still down 21% year to date, with more volatile, quote, mall-levered retail group down 31%. What is interesting is I never came up with a perfect reason for yesterday's move. Just more concern that trade deals are taking time and uncertainty on it if the outcomes will be that great. Pravorsky said, I had a macro dinner last night and says that, quote, all acknowledge that the market could continue to squeeze up in the short term. Now notice he says squeeze. And you've got someone else asking why we're not already ripping to do our 21% at the end of the year. JPM traders think that the market is fatigued by headline risk. That's true. If you try to keep up with the headlines right now, like I try to, you can't. There's just no way. Not only can you not keep up with the headline risk, but you can't keep up with the particulars of it. Over the weekend, we had what? No tariffs on chips, no tariffs on Apple. Then we had, no, those are still on the table. And now we've got more blanket talk. I read an article yesterday that said it's back on again. So no one really knows what's going on here, right? JPM saying traders think that the market is fatigued by headline risk and is no longer overly reactive to positive tariff headlines. Either hard macro data, good earnings, or the announcement of an official trade deal is needed in their opinion. I don't agree with that. I'm wondering if I think that's bullshit. I'm going to explain more on that why here in a minute. Like they're saying either hard macro data, good earnings, that's bullshit. You just go right to the individual issue. You trade the stock itself. You don't trade the indexes. Remember that point that I made about indexes. Like you can go in and trade earnings on its own. Hard macro data, that's 3 to 6 months. I tell you that all the time, right? 1 month data means nothing. You need the story over months as we get policy shift. Every time we get policy shift, any kind of major policy change, you're going to need data, months of it. Can't rely upon one bad month or bookended bad months over a 3 and 6 month period. You need like consistent, you need a trend over time. Forget the 1 day move down on some kind of bad print or something like that. You need that time to have something material to materially change the market. Or the announcement of an official trade deal is needed in their opinion. That's JPM again. What kind of trade deal? There's no trade deal on the table right now, zero, that takes us back to the pre-Trump trade policy. There isn't. If there is, I don't know. Is this all bullshit to pay down debt, maybe? Possibly. All bullshit to pay debt down cheaply? I don't know. If that's the case, distrust across the board. But nothing points towards that. Like zero data points towards, yeah, they're going to pay the debt down with a cheap dollar. We're going to go right back to the old way. Nothing's pointing towards that. We have record factory building in the United States. We have companies across the board changing suppliers, delivery routes, shipping around the world changing. It's massive. We're ending relationships with countries around the world permanently to renegotiate those relationships. There's no coming back from that. So I don't understand this point either. Over at B of A, analysts do not see, quote, overwhelmingly pessimistic sentiment. B of A does not see overwhelmingly pessimistic sentiment. I don't know if I know another time in history that I've been alive, not once. 2008, maybe. Not 2000. I'm old. I've been around a while. I look old, but I don't look that old. But I am old. And maybe at the bottom of 2008, I remember watching, I told you once or twice before, I was watching CNN and they were having bank runs. They don't even have that in the news anymore. They've deleted some of those articles from CNBC. I went back and looked. They've been edited. But there were fears of bank runs. They were running it on CNN. But there was fear of bank runs in 2008. I think there was like a week or two, maybe 3 or 4 days where people were like, oh, shit, this might get bad. But they're saying overwhelmingly pessimistic sentiment. Michigan consumer sentiment is the worst it's ever been. Now, I know it's politically driven, but I got a lot of MAGA friends. I'm not MAGA, but I got MAGA friends. Even they admit, they're like, yeah, no. You can't trust any of this. Like, or where we're headed, or I'm willing to go there, bro. You know what I mean? I'm willing to take the hit for it, bringing jobs back, sewing jobs for Americans.
Just reminding about 10 minutes time, we're expected to get comments, text, and a Q&A from Fed's Hammock. Speaking on Fed 101.
Building phones in factories. That's the jobs we want. We want to be cutting up chickens and stuff down in Bama. So I don't understand this B of A headline either. I will tell you this. So overwhelmingly pessimistic sentiment, right, anymore, and says that out of 18 risk indicators, only 40% are in panic mode. The analysts think that the sharp sell-off and the swift rebound did not provide sufficient time
Spot gold
for real
to about
fear to sink in.
to about $3,323.47 an ounce.
So I'm going to assume two things here. I'm going to assume that some of these banks want to trade 4,300. They want it. They want it right now. But then there's something else here. And this is the part that is concerning. When I read I read this document from GS. This thing was like 2 or 3 books. Took me a weekend to read. It was hundreds of pages. Hundreds. And I read JPM's outlook, which was smaller and easier to consume. And I read Larry Williams. You guys know about Larry Williams' outlook, right? And that was pushing it all off too. I got to warn you, in 2008, right, when Wall Street exited, they never told anyone. And I don't think they would tell you either. So if sentiment is this terrible in the shit can, and if you think about how do we turn that sentiment good, it's probably not going to happen. There's probably no way to allow that to happen. And if people are looking for value, like we need to go deeper, let's say 4,300. Let's like 4,300, right? You got to remember that, yeah, you can be chipper. Hey, man, we're going to bounce and go higher. But how high? Is it going back to 612, 615? Does it ever go back up there? All-time highs? Probably not. And you have to start thinking, not only could that have been the permanent top, could be the permanent top for a decade, sometimes even longer. And even if you get back there, does it just go right back down again? And this is a slow decline over years, 2-3 year decline. And even when it bottoms, it could trade sideways for years and then lowered returns over a long period of time. If that's the case, Wall Street ain't getting back in the way you think they are. They have to do their forced buying, but Wall Street isn't. They'll get their fees for your money and your retirement funds. But this market going higher over time might not happen, especially in indexes. You could have, a shift in where's profit. And you have the destruction of the dollar.
So we do have a video. We'll post it out on the...
Let me explain this a little bit better to you, which is if you buy an asset, if we have an economic shift, right, in our economy, there's really no way to escape it. There's no place to hide. There's no place to hide in bonds. There literally is no place to hide in gold either. You're like, oh, gold's going to stay up. No, that'll start selling. And equities will be similar. And the idea here is when you buy something of value, you want returns from it year over year.
The video of where Fed's hammer.
Buy a share of
financial news feed free to watch.
I buy a share of SPY, let's say. I'm expecting it to go up. I'm expecting it to also pay me a dividend. I'm expecting it to also pay me in selling options against it. That's returns on something I buy, right? Of value. Now, if you don't get those returns that you're expecting out of, let's say, the SPY or NASDAQ or whatever you've got, you want to move your money to something else. Or at least something that will pay you even if it loses value. So let's say I buy SPY here. and it doesn't come back for a decade. Is it better for me to buy SPY, or is it better for me to buy a rental property? Maybe the rental property is repriced lower. Maybe I wait for the crash to finish, buy a rental property, and I get rent every month. Or I buy a commercial property. Or I buy a factory. And, maybe they're devaluing everything. You go back to a PE of stock tickers to 9, 10, 12, 15. And in that repricing, I get annihilated, right? If I'm going to get murdered in that situation, if I buy a house even today, I would still get rent, and it's still producing income for me, even if it's repriced. So if you're going to buy an investment, and we do go through this, you want something that pays you no matter what, every month. No matter what, whether it's land with mineral rights, timberland, factory. So you could see this monumental shift of the elephant money fleeing no matter what is said or done. And so you may have, of course, opportunities for us to squeeze higher. We blast up to, 6,000. If we can even get there. But even then, it doesn't hold, does it? And there's no all-time highs. For that to happen, you need this economic change of our economy to revert. Like, you literally have to have it revert. And it's not looking like that right now. I don't think we're going to see Trump come out and say, hey, we got a trade deal with China, and we're going to revert back to the old economy. His whole platform is not based on that. The thesis, the basis of the thesis is not on reverting back to our old economic system. So, if they exited in 2008 and didn't tell anybody, I don't know if I'd believe anything they tell you today. And this is what they're trying to push this morning from 3 different banks. Like, yeah, we get some good news or something like that, some good earnings, sentiment starts shifting, blah, blah, blah. I would expect that if we traded that 6,000 or 62 or 73 or 80 or 90 or whatever, that it's just going to be used as more exit liquidity in the market. And I don't see an end to that. I'm trying to find some kind of a way to see an end to that. I don't see it. I don't see it from the Democrats. I don't see it from Republicans. I don't see it from MAGA.
1 minute to go now to expect.
I don't see it from anybody.
Q&A from Fed's Hamak. Remember, the video is out on the feed as well.
Well, look at me. I'm talking the market down. Stop talking. They're like, oh, God, Cap, stop talking. Stop talking. It's going down, bro. So, just fundamentally, I wouldn't trust these guys. I think we can get price up there. I just don't know that it's real. And I think that's the key difference between squeezing and the recovery in 2020. The recovery, everyone was on board. People bought in.
10 seconds.
And I don't know how you get that buy-in this time around. I don't know how you can get those valuations if we're building all this stuff in the U.S. I don't know how you get those PE ratios. And I don't know how you, and we're not, I think we're past uncertainty in some of this stuff.
Told policy steady for now. Policy patience
Oh,
allow Fed to gather more data on the economy. Current restrictive monetary policy is needed to lower inflation. High inflation, slow growth.
Let me get back to the charts there for you.
If growth falters and inflation eases, Fed could cut rates even quickly. If the job market holds and inflation rises, more restrictive policy path is needed. Being slow and reacting correctly is better than going too fast. The Fed is the Fed is in a position to take time to assess data amid great uncertainty, and will take time to gauge the impact of tariffs on the economy. Recent market stresses have been somewhat unique. Financial conditions have tightened, and there is more work to do to get inflation to 2%. The economy started the year strong, but recent signals are mixed.
And also this morning, I've got more information for you. Fitch came out today. Remember, we talked about Fitch last year and S&P 500 during the election.
With the latest and beyond the
Bring this up.
news for
Voice
non-farm
news
payrolls,
disconnected.
then sign up today.
The fact that I can't stop that audio. Fitch S&P 500 last year was aware that we were in election season, the largest on record around the world. What do incumbents and new candidates, or what do incumbents do when they're running for premier, president, I don't know, prime minister, or whatever your version of president is? They spend. They spend on their constituency. Bring this up here for a minute. They spend on their constituency. By the way, we're on S2 right now, just below S2. And we were warned last year by Standard & Poor and Fitch that once the toga party is over, to tighten our belts. And that the world would need to tighten their belts. And we also knew last year that when those elections were going on, if these countries did not tighten their belts after their first 90 days, and we were waiting for the last election, which was the U.S., there'd be hell to pay, right? With debt to GDP, with the deficit. And Fitch came out this morning and gave an update. Fitch Ratings has sharply lowered its forecasts for world growth. Remember what I said to you last year, you need the world to join in a recession to get a like 2008 type recession or even a depression. Fitch Ratings this morning has sharply lowered its forecast for world growth in response to the severe escalation in the global trade war. U.S. annual growth in 2025 is expected to remain positive at 1.2%, but will slow to a crawl through the year to just 0.4% year over year in Q4 of 2025. Fitch Ratings China growth is forecast to fall below 4% this year and next, while the Eurozone growth will remain stuck well below 1%. Fitch also goes on to say that the Fitch rating cut world growth forecast for 2025 by 0.4 percentage points. World growth is projected to fall below 2% this year, which would be the weakest since 2009, excluding the pandemic. Remember 2008? Fitch goes on to say that we still expect the Federal Reserve to wait until Q4 2025 before cutting rates, despite U.S. growth outlook. And you just heard what was just said about cutting rates. We ain't cutting shit until we're done. That was just from this news squawker a moment ago. That wasn't the Fitch. That was the Fed. Fitch Ratings cut short-term oil price assumptions and maintains gas prices. Fitch goes on to say, we now expect deeper rate cuts from the ECB and in emerging markets. Last night, Ueda from Japan said, we're going to start cutting. They're already anticipating the recessionary environment. Fitch Ratings, we expect some additional U.S. tariff revenues to be recycled back into the U.S. economy over the next 18 months, including through tax cuts. That was Fed's Hammock speaking. The thesis here circles back to not just 2020, but the outlook from GS this fall. If you read that outlook, I gave it to you in the Discord. When we got to 2026 and 2027, the banks were saying they were risk off. If we're fast forwarding that now, and now you've got ratings companies, or not companies, but ratings agencies, world ratings agencies warning of a world recession, that puts us back in 2008 at minimum. SPOO is going back down to trade the prior low from pre-market. This is cash market low. A failure on the hourly trigger now sending us back lower. We'll likely see a new low in the market. Price target 528.50. Scratch that. Price target 529.45. The White House said China is facing up to a 245% tariff on imports to the U.S. as a result of its retaliatory actions, as the trade war between the world's two largest economies continues to heat up. The top potential tariff was referenced in a fact sheet published by the White House late on Tuesday. It accompanied an executive order signed by President Trump that launched an investigation into the national security risks posed by U.S. reliance on imported, processed critical minerals and their derivative products. A White House official told Newsweek the calculation reflects the maximum potential rate some Chinese goods could face, combining the reciprocal tariff, the fentanyl tariff, and the existing 301 tariffs that go up to 100%. Electric vehicles, for example, have outstanding Section 301 tariffs of 100%, dating back to the Biden administration, meaning these products would face a 245% rate in total. Why does this matter? The U.S.-China trade war is rattling global markets, which fear the economic fallout of the conflict and others that Trump has launched against America's trading partners. Cutting off Chinese imports complicates American supply chains, increasing costs and forcing businesses to source from elsewhere. Consumers also face higher prices. Trump's strategy is to use tariffs to pull more manufacturing investment into the U.S. For many Chinese exporters, all but losing the U.S. market is a severe blow, and they will have to grow in other markets to replace the loss, such as the EU. China's export-reliant economy was already slowing down. The Trump administration, though, is cranking up pressure on China. And as a matter of fact, on that topic, earlier when I said you could do individual issues, individual symbols, you could also invest in foreign markets. One prime example with the EU would be if the EU is going to cancel contracts with the F-35, you're going to expect companies like BAE and others to decide that they're going to now invest in their own fifth, sixth generation warfighters, warfighting planes, and things like that, ships, all kinds of tech. So there may be better investments elsewhere than the U.S. For many Chinese exporters, all but losing the U.S. market is a severe blow, and they will have to grow in other markets to replace the loss, such as the EU. China's export-reliant economy was already slowing down. The Trump administration, though, is cranking up the pressure on China and wants its trading partners to make a choice between Beijing and Washington. This ain't the U.S. If you were to speak to someone from, let's say, Canada, Europe, maybe not China, but Europe in particular, maybe not Mexico, but speak to a European. When you break those bonds with these countries, they're claiming, no, you can't repair this. There is no way to repair this. And this is a gambit here that I don't know. Maybe I'm being short-sighted. Maybe there's something I'm missing here. But I might be missing something here. But this ain't like it's like it's, you know what it reminds me of? It reminds me of traveling. When I go to another country and I see something that would be considered unacceptable in the U.S. by everyone, very acceptable there. It would be like bringing that to the U.S. If you're an American citizen, you've never traveled, or if you've only traveled in a tourist area, but then you left the tourist area, you might know what I'm talking about. But if you've never been out of a tourist area, you may not understand what I mean. But if you go to another country and immerse yourself in it, you might be like, wow, things are different here. Fundamentally different. It would be like going to another country that drives on the other side of the road and saying, hey, why do you drive on the left? We want you to change driving on the left-hand side of the road. And they say, why? And you go, well, because we're telling you. Because it makes sense to me. You should get over this. They may not. What to know on this? Chinese Foreign Ministry spokesman Lin Jian was asked about the 245% rate at press briefing on Wednesday. Quote, you can ask the U.S. side for the specific tax rate figures, Lin said. China News Network reported, quote, China has repeatedly stated its solemn position on the tariff issue. Quote, this tariff war was initiated by the U.S. and China's necessary countermeasures are to safeguard its legitimate rights and interests in international fairness and justice, which are completely reasonable and lawful. Trump imposed a 10% tariff on imports from all countries. He has temporarily paused additional reciprocal rates set individually for each country, depending upon the trade barriers faced by the U.S., to allow time for negotiations on new deals. The exception to that pause is China, which is facing increasingly higher tariffs from the U.S. and has responded in kind, among other countermeasures. The U.S. has imposed 125% reciprocal tariff on China, plus a 20% tariff related to fentanyl. This week, China imposed more export controls on rare earths, which includes what? Materials used in high-tech products, aerospace manufacturing, and the defense sector. I read a point yesterday that said 90% of world rare exports originates in China. 90%. Remember here, think about this thesis. If I am able to get my trading partners, let's say the EU, Mexico, Canada, and others, to begin trading with me again, remember the original thesis. We're not in a trade war with China to get a better trade deal, are we? Not in any way, shape, or form. Why are we in a trade war specifically with China? Why? Hegemony of the world. Hegemony of the dollar. This is what countries do. I'll put this simply to you. A friend of mine said to me, he goes, this is how I'll put it to you. Cap, he goes, do you piss in the toilet or in a pot? And I said, I piss in a toilet. He said, if you don't have the dollar, you piss in a pot. And whoever has the dollar, you can call it whatever you want. The won, you can call it, I don't know, the loonie. You can call it the yen. You can call it the pound. Whatever you want, whoever controls that currency pisses in a toilet. China appointed Li Changgang as its new trade negotiator on Wednesday in the midst of its tariff fight with the U.S., a move that may signal a change in style from Beijing. So we're basically telling China, bend the knee, aren't we? Bend the knee. We're not telling them we're going to negotiate. We want a reciprocal trade deal where everyone's happy. This has nothing to do with trade, does it? It has to do with the hegemony of the United States of America. Prior to his new appointment, Li spent about 4.5 years as China's ambassador to the WTO, the body that governs global commerce and to which Beijing has appealed in its tariff dispute with the U.S. He was also deputy permanent representative to the Chinese delegation to the UN office in Geneva and other international organizations in Switzerland. Li participated, hold on a second here. Li participated in negotiating China's accession to the WTO more than 20 years ago. Quote, there might be another style of negotiations. Li is an open-minded person and supports free trade. Tu Xingquan, dean of the China Institute for WTO Studies at the University of International Business and Economics, went on to say, what people are saying, Chinese Foreign Ministry spokesman Lin Jian said, quote, there is no winner in tariff wars and trade wars, and China does not want to fight, but it is by no means afraid to fight. There is a winner. President Trump wrote on his Truth Social platform on April 13th, quote, nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. Trump wrote on his Truth Social platform on April 13th, quote, we are taking a look at semiconductors and the whole electronic supply chain in the upcoming national security tariff investigations. Quote, what has been exposed is that we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China, which do everything within its power to disrespect the American people. We already know that the U.S. has been building factories. This trade has been in motion now since post-COVID. They started this in 21. What's next? Despite the eye-watering tariffs and tough rhetoric, both the U.S. and China have said they are open to talks on trade, though further tit-for-tat retaliation is likely in this conflict between two great powers. That's kind of ironic. The Newsweek calls them two great powers. It doesn't mention that the U.S. has 60% larger GDP than China. Separately, the Trump administration is discussing trade deals with at least 15 countries that have approached it to negotiate. It may use those talks to squeeze China by giving America's partners an ultimatum. Better terms with us or shut out with China. Shut out with China. No one I'm speaking to or reading from is mentioning that at all. Not a single soul. I haven't read any articles. I haven't read any commentary. Nowhere where Europe is looking towards the U.S. and not China at this point. So I'm questioning here. The hope that these things improve. That we have a material shift, like JPM over here said, either hard macro data, good earnings, or the announcement of an official trade deal that is needed from JPM. Does any of this sound like we're anywhere near that taking place, or sentiment shifting across these different nations? I'm going to say no to that right now. And on a related frontier, Hong Kong yesterday has temporarily suspended accepting packages destined for the U.S. due to a change in U.S. tariff policy. This should grow, by the way. This move, which affects both air and sea mail, is a direct result of the U.S. government's decision to remove the de minimis exemption, which previously allowed duty-free entry for small packages. This is where you go to AliExpress, DHgate, Temu, Amazon, all those products that you buy on Amazon. You go, oh, I'm going to get a t-shirt on Amazon. It's not Hanes. It's like Amazon Basics or something like that. And it's just a reseller selling goods from AliExpress. What's the other one? Alibaba, Temu, DHgate, any of those companies. And if they're under a certain, I think it was under a certain price, like $400, I think, was exempt. No longer the case. It's $800. The U.S. government eliminated the de minimis rule, which allowed packages under $800 to enter the country without duties or tariffs. The impact on shipping. Hong Kong Post has stopped accepting parcels for delivery in the U.S. via land, air, and sea effective immediately, and will no longer accept airmail packages containing goods starting April 27th. Documents are still allowed, and alternative shipping options. People and businesses in Hong Kong will need to rely on private couriers for shipping goods to the U.S., potentially leading to higher costs. So if you wanted to find private carriers that could be delivering some of these goods to invest in, then maybe that may be worth looking into. Late last night after the bell at 6 p.m., NVIDIA took a haircut, and AMD as well took a haircut. NVIDIA to record a $5.5 billion charge as U.S. cracks down on chip exports to China, a write-down. AMD sees up to $800 million in charges. Let's watch this closely here. Got the new low here at 12 o'clock, but we did not get the new low into 12:30. We might be recovering here. Still have a gap lower at 529.56 that is left unfilled. NVIDIA said it is set to take a $5.5 billion first quarter charge after the U.S. limited exports of the AI chips to China. The news, the latest salvo in an escalating trade war between Washington and Beijing, sent the firm's shares tumbling on Wednesday. This was yesterday after the bell. The U.S. government also imposed export controls on AMD AI chips to China, which the company said could lead up to $800 million in charges. NVDA said it expects to take a $5.5 billion charge in its fiscal 2026 first quarter results after the U.S. limited exports of its artificial intelligence chips to China. The news, the latest salvo, and an escalating trade war between Washington and Beijing sent the firm's shares tumbling 6.5% Wednesday. The company said in a regulatory filing late Tuesday that it was informed by the U.S. government on April 9th that it would be required to have an export license, quote, for the indefinite future, end quote, to sell its H2O chips to China. NVIDIA said the license requirements is aimed at addressing the risk that the chip would be, quote, used in or diverted to a supercomputer in China. The chip is less powerful than its newer ones and tailored to meet existing export limits for the Chinese market. NVIDIA's Q1 results, which are expected on May 28th, are set to include the $5.5 billion charge associated with the H2O products for inventory, purchase commitments, and related reserves, it said. According to Morningstar Research, China has shrunk to about 10% of NVIDIA's revs from 20%, and now expected to go close to zero. The New York Times reported that a spokesman for the U.S. Commerce Department said that the administration was issuing new export licensing requirements for NVIDIA H2O, a chip from AMD, the M1308, and their equivalents. So they are going to get a new license. But I want you to remember this trade war that's going on with China. I want you to remember that this quote that I just read to you, that NVIDIA said the license requirement is aimed at addressing the risk that the chip would be used in or diverted to a supercomputer in China. And we know that there's now an investigation that Trump wants to begin on semiconductors. So even if there was hope, we'll get the license and I'll square it away. And that $5.5 billion is a write-down and it'll come right back. Don't worry about it. Not if we begin investigations and put the screws to companies like NVDA and AMD. The export controls will affect other American chip makers, including Micron, MU, and Broadcom, AVGO, according to Citi analysts. In a note Wednesday, they said Micron is already mostly cut off from China, given it was hit with a partial ban by Beijing in June 2023. Meanwhile, Broadcom is affected because of the impact on TikTok owner ByteDance, which buys NVIDIA's H2O chips, Citi said. So not good news here either. So a dour outlook here heading into tech earnings. Dour outlooks heading into tech week that begins this Friday with Netflix, but that continues on into the month of May. So this whole JPM thing here about earnings season, what's our biggest driver? Usually tech stocks. That doesn't seem to be the case right now leading into the month of May. Remember what JPM said, hard macro data. We had some good news this morning. Didn't matter. They're waiting for what? Months of good data. We've got Fitch coming out saying, we might not get that good data. It might actually begin to deteriorate into the end of the year. JPM, again, going back to that conversation from earlier, saying good earnings. Which companies do we have looking forward to good earnings to drive the market at all? Not tech stock, or at least not chip stocks. or the announcement of an official trade deal is needed in their opinion. I don't see the three of these answers being answered in the way that we're looking for. Now, we can squeeze, but it's likely just a squeeze. SPY trying to recover right now. No new low in the half an hour. See if we can turn this around to the upside. A note here, an SPX Gamma. SPX trading 53.35 currently. There's a half an hour trigger crossing from above to below.
When things are uncertain, it's better to think about scenarios over forecasts. Also seeing the S&P 500 extending declines, last down 1.2%.
There's a trap above here. Even if we escape here, there's a trap right in here.
Fed's Hammock says sustained tariff battles could create more extended pressures. Hammock says going into every Fed meeting with an open mind.
11:25, 11:30. We could squeeze big here. This is SPX GEM here. I want you to pay attention closely to this half an hour trigger. This half-hour trigger is breaking over. Trap us in here.
According to CBP, they say the latest tariffs have generated $500 million, well below Trump's estimate. So, U.S. Customs and Border Protection told CNBC the department has collected more than $500 million under Trump's latest tariffs. Trump has repeatedly said that the U.S. is taking in $2 billion per day from tariffs. CBP says that the average $250 million a day was collected even during the glitch that impacted freight already on the water.
You guys see that? Sorry, I'm trying to put this together here. Hold on. Clock. 30. p.m. Just want to write this in here and see if we go that way.
Tamak says it's key for the Fed to keep inflation expectations contained.
Friday, 12:30.
Hamak says that I'm hearing lots of uncertainty from businesses about the economy. Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%. Hamak says that trade policy is up to elected officials and the Fed navigates the impact of those policies. Hamak says businesses unaffected by tariffs may raise prices too.
Net gamma. Price target 52.50 on SPX. $528.39 on SPOOs.
Fed's Hamax says recent market moves are somewhat unusual and hard to interpret.
No, they're not. Give me one quick second here, guys.
Hamax says market-based inflation expectations are well behaved. Hamac adds that it looks like inflation expectations are reasonably close to desired levels. Ten minutes away from the top of the hour, we get the US with their 20-year note auction. So with the 20-year note auction, they're looking to sell $13 billion in the 20-year bond reopening. Fed's Hamac says, I don't know what to make of stock declines and yields rise. So with a prior bid cover of 2.78 for the 20-year and a prior high yield rate, prior high yield of 4.632%. This is according to JP Morgan strategists. They say in a late Tuesday note predicted a smooth auction based on high yields and cheap valuations and improving technical backdrop. Latest CFTC positioning data shows speculators were net short 18.2K classic bond futures contracts as a possible source of demand for the auction.
Check 1, 2. A few seconds there. I got something I got to do here, guys.
Surely expecting the 20-year bond auction data with the when issued coming out at the top of the hour. Ten seconds.
Just note we have a 20-year bond coming up right now.
Four spot 814%. Four spot 814% for the when issued 20-year yield. bid cover of 2.63, 2.63 with a high yield of 4.81%, 4.81%, and awarding 6.47% of bids at high. The US selling $13 billion. Primary dealers take 16.99%, directs 12.32%, and indirect 70.68%. So 20-year bonds drawing 4.81% versus 4.814% compared to the pre-sale when issued yield. OpenAI releases two models, O3 and O4 Mini, to be incrementally available starting today in API and ChatGPT. Surely expecting the Fed reverse repo operation data.
Don't believe this squeeze right here. We're going down.
Please take $54.772 billion at the Fed reverse repo operation.
This half-hour trigger is coming down right now on top of this hourly trigger on SPX.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service. So just a reminder for everyone with Fed's Powell speaking at the bottom of the hour. We have posted out his video where he will be speaking on the Financial Chiefs newsfeed. Speaking to the Economic Club of Chicago at the Economic Outlook. Text and Q&A is expected.
Just a note here, I want you to watch this really closely here. There's a squeeze here. This is 11:30 this morning, the high at 11:30. We have the half an hour trigger coming down and flattening. I'm going to just watch out for a major squeeze here, but it's not positive.
Fed reverse repo.
Could be a liquidity grab up here.
$5 billion.
You see this here? Big squeeze. sell back down into the close today at 4 p.m. So a fake out of sorts. I want to show this to you in the main screen here. That sits all the way up here at 535. We're trading 531 right now. You've got Jerome starting. You could get this big squeeze up here. So if you're short, be careful up here. But it doesn't preclude the move to the downside. We could get some violence and moves on SPOOs on Jerome Powell at the Economic Club. It'll be a back test of the half-hour trigger on SPX. I'll have this on. I'll be playing it here in just a minute, I think. Yeah, I've got it on. I got it on right now for you guys. Starts in 3.5 minutes here. This is all still valid down below here. All of this is valid down here. You might get a squeeze. We've got the half-hour trigger flattening to the upside. Failure should take place at 534. 43. You're in short here, be very careful of a squeeze and then the roll. Remember that Jerome is going to normally be antagonistic towards the market. So he might come out seemingly bull plane forming right now on SPY. He could come out seemingly dovish towards the market, but if he's addressing at any point that Hammock earlier was laying out that there'll be no intervention from the Fed. So if he starts out not antagonistic towards the markets, but then of course says, "Hey, we're not doing shit for you. You likely be lucky to get a cut this year." Q4, he'll try to placate the market, saying, "But if we need to quote move quickly, we will." But if he at any point says anything like, "Yeah, like we'll move quickly, but we're not planning on altering the course that we're in," that is a net negative on the market. So you could see violent upside moves up here and then violence to the downside. The way is lower, not higher at this point. You've got negative gamma roll or negative puts hammering the market all morning right now. Watch out for this expansive range. If you're wondering what to do in here, you're looking for either a bottom here or a top to short up here. Buy this or sell this right here. Way is lower.
5 minutes away from when Fed's Powell is due to speak to the Economic Club of Chicago. The video is out on the feed for you to watch him live, and there is text and Q&A expected.
And there's a Q&A. $535. Yep, right here. This is going to seal the deal right here. $534.74.
Remember, text and Q&A is expected. Ten seconds.
I'm not seeing this right now. It's on right now. I'm not seeing any live feed.
Says an inflationary effect of tariffs may be more persistent. Impact of tariffs likely larger than expected. Labor market appears to be solid and broadly in balance. Powell says Fed is obligated to keep inflation expectations anchored, and also tariffs are likely to at least generate temporary inflation. U.S. economy is solid despite heightened uncertainty.
This is the written prepared marks.
Powell says at or near maximum employment and inflation is a bit above 2% goal, has come down a great deal. Growth likely slowed in the first quarter of 2025 from last year's solid pace. Strong first quarter imports to weigh on GDP growth. A sharp decline in business, household sentiment, and elevated uncertainty, reflecting trade policy
please
concerns.
Welcome past chair of the club,
PC prices
Deborah
likely rose
Cafaro.
2.3% in the 12 months through March. Core PC estimated at 2.6%. Administration's policies still evolving and effects remain highly uncertain.
Thank you.
So far, larger than
Greetings.
expected.
I want to
Tariffs
warmly
likely mean
welcome
high
you to
inflation and
today's
slower growth.
Economic Club of
Just keeping an eye on the
Chicago
markets here. The
program.
S&P 500
The
is seeing some
SPY bleeding right now.
Here in the
comments.
room in Chicago,
Inflationary effects of
and the
tariffs
countless
could be
others
more
joining
persistent.
us
Depends
virtually
ultimately
from
on
around the
inflation
country
expectations.
are a testament to the importance and the timeliness of
Also adding
today's
that we may
topics
find
and
ourselves
speaker.
in the challenging scenario in which
Today,
dual
we
mandate
have
goals
the
are in
great
tension.
privilege of hearing
If that
from
occurs,
the
we
Honorable
could consider how
Jerome
far the
Powell,
economy is from each
Chair of
goal
the Board of
and potential
Governors
time
of the
horizons
Federal
for those
Reserve
gaps to
System.
close.
Today's a little
So
special.
just to summarize then, Powell
out of
says make
Target right here.
with mandates
And
in
because
tension
528.39. Take the money and run.
without price
Take
stability.
the money and run.
And well positioned to wait for more clarity for the
There'll be more blasting down.
500 seeing movement towards the
so that we
downside
all can
and
gain
the
the
dollar.
You'll see one more leg to this downside, but watch out for this tag here.
Comments.
Now, it's my pleasure to welcome my friend Austin Goolsbee, the President and CEO of the Federal Reserve
Keeping
Bank
on the
of
US stocks,
Chicago,
stocks
a renowned
extending falls, Dow
economist
Jones
and
down
our
about
fellow
1%.
ECC member. Austin, take it away.
Thanks, Debbie. It is a real pleasure and delight. Should I move that for you? To introduce our guests, two of the firm.
This is direct from the Fed, so I'm not sure what's going on here.
Let me introduce
No video.
my friend and professor at the University of Chicago Booth School of Business.
US short-term interest rate
Dr.
futures
Raghu
little
Rajan,
changed after release of Fed's
the
Powell's
Catherine
prepared
Dusick
remarks.
Miller Distinguished Service Professor. He is a world expert on banking, corporate finance, economic development, author of numerous award-winning books, was himself as a scholar winner
Also did see
of the
Nasdaq
Fisher
100
Black
extending
Prize, which
decline
goes
to about
greatest
2.6%.
financial researcher under age 40. He's since over age 40, but he was the inaugural winner. He is a member of the Group of 30, and he was the 23rd governor of the Reserve Bank of India, and before that, chief economist and director of research at the International Monetary Fund. You probably know him as a regular contributor to the Financial Times. He speaks extensively on economic and financial issues. Please give a warm welcome to Professor Rajan.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls?
And then our
Then sign up
featured
today and
speaker
get
will
our
be
special
Jerome
offer
Powell,
of Financial
the
Juice Pro
16th chair
for a
of the
year's
Board
worth
of
of our
Governors of the
service
Federal
for the
Reserve
price
System.
of 1 month.
As
and
head
save
of the
92%.
U.S. Central Bank, as you know, Chair Powell plays a crucial role in the country's monetary policy, oversees major financial institutions, and maintains economic and financial stability.
Just a note.
He was
We're next going to trade 520.
by President Obama in 2012. He was subsequently elevated to chair of the Fed by President Trump in 2018, and then renominated to his post by President Biden in 2021.
520 is on board.
He has the respect of members
We will trade 500 likely. We got to hit 520 first.
as Fed chair.
We're going to break through this, and then we're going to start hammering down to 520. We'll hit 500 by Friday.
that the Fed will not be in a position to preempt weakness from a trade war.
To fighting inflation, to bank
So
runs,
specifically
and on and
citing
on.
that we may find ourselves in a challenging
His
scenario which our
leadership
dual
at the
mandate
Fed
goals are
has
in
been a
tension.
steady hand
It's saying
and
that,
one of the
so Nick
all-time
says
greats.
that is summer message,
Before coming to the
leavened with
Fed,
a
Chair
local
Powell
Chicago
was a
nod
visiting
to
scholar at
how
the
unpredictable
Bipartisan
things have
Policy
become.
Center in Washington, D.C.
Watch out. We need to first establish the rejection here.
Treasury Department under President George H.W. Bush.
The squeeze could be large.
Institutions, the Treasury debt market, related areas. Outside of public service,
Also keep an eye on the
Chair
dollar,
Powell
seeing
has
a
worked
movement
as a
towards
lawyer.
This could crank all the way up here,
been a partner at the Carlyle.
even higher to 535.
On corporate boards, he served on boards of charitable and educational institutions, including the Bendham Center for Finance at Princeton.
We have posted
and
out
the
Powell's
Nature
full speech on the feed
Conservancy
for you to
of
read through.
Washington, D.C. and Maryland. He is a D.C. native, received a BA in politics from
We're going to start blasting here, boys and girls. You might get a circuit breaker today. It's possible.
editor of the Georgetown Law Journal. Please welcome to the Economic Club of Chicago again, Chair Jerome Powell.
Let me check the numbers here. I'm doing a bunch of work here in the background. Down 1.65%. No, maybe not a breaker. Well, it's 3. I think it's 3%.
Thank you and good afternoon.
Let me check really quick here.
Great to be back in Chicago. And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu.
No, expect 3% by end of day.
The outlook for the economy and monetary policy. So at the Fed, we are always
We're at 1.67 at the moment.
Congress has given us maximum
We're
employment.
going to blast down. We're going to trade 520 here.
Despite heightened uncertainty and downside,
Unless he says something.
is still
Unless you get a Fed put today.
the labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking ahead, looking forward, the new administration is in the process of implementing a substantial policy
Trading 528.01.
distinct areas
Target downside 526.86.
and regulation.
526.11.
These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens.
526.10 target.
So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully.
This is really negative from Jerome, by the way.
Keeping longer-term inflation expectations.
First target hit on SPY.
Our obligation is to keep longer-term inflation expectations well anchored.
He was
And to
stocks
make certain
extend
that a
full
one-time
S&P
increase
500.
We're not done. We're gonna fucking elevator down.
Ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans.
We're not done going down here.
We find ourselves in the challenging scenario in which our dual mandate goals
And the
are in
Nasdaq
tension.
down.
That's first target hit.
We would consider how far the economy is from each goal and the potentially different time horizons over
We're
which
still going down. We're not done.
would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments.
That was political just then, as a matter of fact.
We continue to analyze the incoming data, the evolving outlook,
That statement about life moves very fast, he's speaking about Trump.
employment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can.
He's giving a stern warning to the public right now.
Thank you, and I look forward to our discussion.
Still no break of support.
Thank you very much, Chair Powell, for those remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so.
If you're a bear, you want to see this target hit down below at 526.11 or a breakthrough of it.
I'll try and compensate in the
Support holding right now.
As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by
This red box here is
really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now, it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the appearance I did here was my very first appearance as chair 7.5 years ago, so it's great to be back. And I would agree with you that it's been an eventful 7 years, putting it mildly. I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low fours, close to mainstream estimates of maximum employment, and inflation came down and was running at the end of the year around 2.5%. That's the economy that we had, and I won't decide how to characterize that, but that's where things.
We are heading down to trade 500 right now. We're going to trade 20, then 10, then 5. We're going to blast down.
As I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows.
Fitzpalce's effects of
It is highly probable that 480
some part of those tariffs come to the
will get hit as well.
to be paid by the public.
Not today, but it'll take time.
Likelihood. And my hope is that we'll get through this and get back. Well, we're always going to be aiming
400-point drop.
price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little
Powell
more
says
about
we will be
tariffs.
protect your
I mean,
trades
you
from macro headline
recognize
risk with
that
financial.
some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent, and what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen.
Now trading the low, the target.
But it depends on a number of things.
We're looking for 526.11.
Or three of them, actually. One is just
If you're bearish here, which I'm super bearish, you'd want to see a break of it really quick.
forecasters
Just a quick touch.
larger than we expected, even in our upside case. We looked at a range.
526.13 hit.
The second one is how long does it take for the tariffs to have their effects on inflation? To the
You
extent
want to see the break? We just got the break just now.
that raises the risks that the public will begin to experience higher inflation. They'll come to expect.
Next target.
Companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of
Next target, 524.75 and ultimately 522.92.
currently applied on China? There's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected
522.41.
I had dinner at the Chicago Fed last night and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue.
SPY now down 2.14%. 3% is the target.
At the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve.
All this stuff is going to hit the press today.
Inflation shock to be extended, perhaps more persistent. And
You're going to get this as headline news. They're going to start running this tonight to America.
their supply chains
This is not the 60 minutes that you're looking for from COVID.
worry that process.
You're getting the warning from the Fed, which is the diametric opposite of COVID.
All of this is highly uncertain. We're thinking now, really before the tariffs have their effects, as how they might affect the economy, and that's why we're
The effects of policy will likely move the Fed away from its goals.
and then we can make a better assessment of what the economic effects will be.
Fed Powell saying we will be moving away from goals for the balance of the year. Fitch this morning coming out and saying a major downturn expected in Q4.
Seen over the last few months
Powell also saying unemployment likely to go up as economy slows.
into this administration,
Tariffs are larger, even larger than the Fed's upside estimates.
how that will affect the labor market.
Also coming out, China is now officially announcing pivoting away from the U.S. to Canada for oil.
Immigration, and those people went to work. The economy hired them. You know, there was a lot of demand. We were still working off the labor shortage. What's happened
From earlier, when you heard the news yesterday from NVDA, and then the counter argument to write-offs to $5.5 billion, Trump announced
stopped. It's real.
investigations into tech,
Demand has also
into semiconductors. Just now,
demand for
the U.S. coming out and saying they're weighing penalties to block DeepSeek from U.S. tech buys as a veritably
about a year.
fuck the $5.5 billion and the licensing for NVDA.
Supply for work.
This is turning into straight-on sanctions against China buying any semiconductors from U.S.-based companies.
Labor force participation is still strong. Wages have moved back down to levels that
Powell saying car company supply chains likely to be disrupted for years.
it's in a really good place. Longer term, you know, the effects of immigration are not thought to matter much for inflation.
Trump or J. Powell dropping bombs right now.
Each other out, so
Trump's going to go fucking ballistic.
impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs.
Trump seemingly concluding
How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be.
it's not big yet. Federal layoffs are not that big right now.
Force of 170 million people materially.
They're talking about a major slowdown around the world, leading to a 2008-style recession at best. Fitch this morning saying the same.
That have a lot of universities and research hospitals and research institutions. We're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to.
None of this helps sentiment.
Cutting back on scientific research may have implications for economic growth for
All of this flies in the face of the banks this morning and the trading desks looking for an answer. Earnings doesn't answer this in any way, shape, or form.
We're talking about the future. You may be confronted in the not so
Macro data is now being thrown in the shit can.
as well as potentially higher inflation. And of course,
Banks looking for either great earnings, great macro data. You have Fitch and the Fed now saying no.
and how it would address it.
Note that we broke below this red bar. We're just looking for a rejection.
most of the time when
529.15.
low and unemployment is high, and both of those call for lower interest rates.
Watch out for the squeezing in here. The squeezing could be epic.
Are not intention, and they're not really.
So we tagged this one. We're going to move this one over.
But the
We're going to move that one over.
impulses
But I want you to realize that the squeezing in here could be fucking monstrous.
unemployment and higher
529.19 needed to continue lower.
does one of those two things at the same.
All the way up here.
It's a difficult place for central banks, to be in.
And none of this is required.
So we,
Go all the way over there.
what we can do is we actually have a little provision in our consensus statement.
None of that is required.
We vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask
S4 524.78.
goals. We'll look at those things and think about them, and
Target end of day 520.75.
we're not experiencing
We're
that.
going all the way down here, gang. All the way down here.
Our
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years.
None of this talk is good.
The worry today is not just about immediate policy uncertainty, but an entire change in the U.S.'s economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty.
Structural uncertainty.
Effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that
It's like a frog boiling in water, and now you're getting the head honcho discussing it publicly.
in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago. So
This is fucking bad.
About this, and businesses and households are saying in surveys that they are.
We could start crashing between now and Monday.
There's a lot of research. Some of it.
The shit is gonna hit the fan over this discussion right now.
To businesses and households.
You got trust me, bro, Jim James telling you. Now you got fucking Jerome telling you right fucking now.
Through a phase, and then you know what things become more certain, and therefore, people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people.
This guy's the only person telling you the truth right now, Jerome Powell.
That would weigh on, to me, investment, just in general.
Listen to this, investment in general.
Jurisdiction where risks are just structurally higher going forward. That would make us less attractive as a jurisdiction.
It doesn't actually matter what you buy. Whatever you buy better be fucking giving you money.
Well, let me turn to financial markets.
SPY even weaker, trading 524.73, now breaking below S4.
The levels of the VIX are up to the level.
Downside target 522.41.
Somewhat now. Some people believe the Fed will intervene if the.
Trading 524 and change.
Are they correct?
522.41 target.
I'm going to say no with an explanation.
Right here.
So what I think is going on in markets is markets are processing what's going on, and
no bank's going to tell you this.
the policies, particularly the trade policy, and really the question is, where's that going to come in? Where's that going to land?
This is going to fucking freak people out. Like, pull all my money out of 401ks, bro.
That would still be highly uncertain once you know what the policies are. It'll still be
There's like reporters right now going, I got to say all this stuff.
a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly.
First target, 522.41. Want to break 520 to trade 500
We've seen volatility
in the coming days.
and at a time when usually there's a flight to safety, we saw yields on the German Bund and the Japanese government bond come down, but we saw yields on U.S.
Still remain vigilant on squeezing to the upside, 529.88.
So I would just say
all the way up here.
I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the
Expect big moves here, big moves.
And then 2 months later, you look back and go, that was completely wrong. So I think it's very premature to say exactly what's going on. Clearly, there's some delevering going on among hedge funds in levered trades and things like that. It's also, again, it's the markets processing historically unique developments and with great uncertainty. And I think you'll probably see continued volatility. But I don't
look for a break below 520.
What's causing that. I would just say markets are orderly and they're functioning kind of as you would expect them to in this time of high uncertainty.
So the Fed, in its last meeting, slowed the pace of shrinking of its balance sheet. Was this driven by uncertainty about how much reserves and liquidity the market needed, and you wanted to take a little more time to find that out? And flip side, you said the market was orderly.
SPY now squeezing higher.
Market disruptions emerge. Would the Fed intervene?
2 o'clock in the afternoon, 2 hours left.
We think that reserves are still abundant. So we don't think we're close to the point, particularly close to the point where we would stop. But we were facing a situation in which, for other reasons, there were going to be big flows into and out of reserves as it had to do with the debt ceiling and the Treasury General account. For those of you who are Treasury market...
CNBC trying to quell panic right now, coming out and saying, here's why retirees shouldn't ditch stocks. This is going to create panic. CNBC on TV right now trying to quell panic as this shit hits the fucking fan on the news cycle.
Instead, we debated it. It's one of these great debates that we have at the FOMC. We decided to...
also reiterating,
People really came to see them.
not going to stop the balance sheet runoff.
The less, the smaller the balance sheet can get without disruptions. And we want that process to continue, and now it's at quite a slow pace. So we think that's a really good thing. So that means it can go on for a longer amount of time, and we'll be able to reach kind of very carefully what we think is the right...
All quoting 1930 depression, tariffs not being as high then as they are now.
With all these disruptions, do you stand ready to supply dollars to central banks as you've done in the past when there's been a global shortage of dollars?
Sure, absolutely we do. Just for everyone's knowledge, we have standing dollar swap lines with 5 large central banks, and they go to the jurisdictions where there are big overseas dollar funding markets. And in effect, those are overseas markets where, for example, a European or Asian institution is buying an asset-backed security that is backed by loans to American consumers. So in effect, these are loans to American consumers, and we support that. We want to make sure that dollars are available. They need dollar funding to hold those dollar assets. So the way it works is, when needed, we lend to the central bank in dollars, and they pay us back in dollars. They then pay in their currency. They lend on in dollars. And so we take no credit risk or anything like that, and it supports dollar funding markets. Dollar funding markets are very sensitive during times of crisis, and it's very helpful. The reason we do it is it's really good for U.S. Consumers. So we'll continue to do that, just as part of the dollar being a reserve currency, the reserve currency, most important, and we will do that.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment, and this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later. In terms of, if I can say from my time working on these issues, it's not the Fed's issue, but if you look at a pie chart of federal spending, the biggest parts and the parts that are growing are Medicare, Medicaid, Social Security, and now interest payments. And so that's really where the work has to be done. And those are issues that can only be touched on a bipartisan basis. Neither party can figure out what to do without both parties being at the table. So that's critical. All of domestic discretionary spending, which is essentially where 100% of the conversation is small as a percentage of federal spending, and is declining it's already declining as a percentage of federal spending. So when people are focusing on cutting domestic spending, they're not actually working on the problem. Domestic discretionary spending is already going down. I like to make that point because so much of the dialogue
We're going to start panicking here, gang. I'm going to warn you one more time right now.
is not the issue.
This is the only guy in the U.S.
Turning to
that's telling you not to panic. He's telling you to panic.
we still have some
CNBC is running counter articles right now not to panic.
balance sheets, whether they've been fully dealt with.
This is the diametric opposite of what you got during COVID.
The very rapid growth in various forms of private credit over the last few years.
The shit is going to hit the fan, guaranteed.
Full-blown recession. How would you put the resilience of our financial institutions at this point and their ability to weather potentially uncertain times?
So I think our banking system is well capitalized with liquidity and is quite
I'm
resilient.
not seeing any response from Trump yet, and he called Trump out like
In terms of the
20 different ways. Like that or hate that, this is an apolitical position.
on this for 4 or 5 years,
And this guy just got political. This guy's warning you and I.
elevated concentrations of real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing. So, and that's been going on for some time. The very largest banks don't tend to have high concentrations, so this is a problem that we have known would take years to work through, but we're really well into the process of working through it. In terms of the non-bank financial sector, it's grown enormously. The provision of credit by non-banks has grown just really fast. Most of it has been funded, though, with a private equity-like structure where it's limited partners who are signed up for 10 years to a general partner to invest that money. They're not depositors who can run. You know, your money's committed. And so that funding model is kind of run-proof. That isn't some law of nature, though. So when you do start to see shorter-term funding creeping in, to your point, though, Raghu, this very fast-growing and now quite large private credit part of the economy has not really been through a significant credit event or significant. It's really grown since the pandemic, and so just for that reason and for how fast it's growing, we have a close eye on it. It doesn't have the same kind of prudential regulation, though, that the banking system has. So we're watching it carefully, and as I mentioned, it's a more stable funding source to the extent its institutional investors signed up for a long period. But we're watching carefully.
Right, wearing my banking research hat, actually banks are also involved in
That's
funding
right.
these institutions in a big way.
Yeah.
We do know the administration wants to relax regulations in many areas, one of which may well be banking. What can you tell us about the Basel III endgame, so to speak, which is, at this point primarily focused on additional capital for the large banks?
The Fed view, and my view, is that we should proceed to complete the Basel III Accord, and we would have to do that, and would look forward to doing that in conjunction with the FDIC and the OCC. But our view is, and I think the bank's view as well, is we should complete that. You need international minimum standards. That's kind of a common good, and we're not bound by them. Really, nothing. The United States has plenty of input into what those accords contain. So our view is strongly that we should complete those, and we could do it, I think, relatively quickly. We're not so very far away from what would be a good, I think, outcome.
Well, let me move to something which is more about technological change and new kinds of instruments, cryptocurrencies. How do you see the potential for more favorable regulations coming on them and potential risks from that for the system?
So we went through a wave of failures and fraud and things like that were the headlines for a couple of years. And I think
Sorry, I'm in a conversation with Winky right now.
During that period, by the way, we worked with Congress to try to get a legal framework for stable coins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking.
Depending on how you see this,
And the House are looking at a framework, a legal framework for stable.
you know, depending on how you're looking at this right now,
We need that. There isn't one.
if you're a MAGA supporter, you're probably fucking angry.
Actually have fairly wide appeal.
Um,
Contain consumer.
if you're not a MAGA supporter, I mean, there's some things to think about here. Trump could possibly be asserting more power behind the scenes that you don't see. This is unusual for a Fed chair to be saying.
Conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that.
Something's going on behind the scenes where he said, fuck it. He said, I'm just going to go public and confirm all this shit.
Appropriate innovation, but that does so in a way that, again,
Trump has made commentary recently saying he wanted to assert more power over the Fed. I'm assuming that there's been more behind the scenes.
You have a
Banks likely know about this as well because you know Powell is a banker, right?
surveys
So someone is pulling out
between a rise in the
a Trump card
which is what the public
before they're removed.
about, and the rate of increase in prices, which certainly
I'm looking at the quotes here, and dude, all this stuff is this shit's gonna hit the fan,
so even though we're coming down to 2%,
and it's gonna require all of these major statements to be addressed
increase.
by others,
So
your lawmakers, your bankers, your financial advisor,
about how you might want to address this
instead of beating around the bush.
prices as much as the rate of change, which matters.
first of all, I think you're right, and I think the public is right. When we say inflation is back down to 2%, 2.5%, and we think that's a good thing, it is a good thing. But if you're paying 20% more than you were paying in 2021, that doesn't help you much. You're still paying a lot more than you used to be paying for the necessities of life. So it's just another way of saying people hate inflation, and it's easy to understand why.
They hate it.
All we can really control is a world in which, in the world we're living in, prices don't go down.
Watch out for a squeeze here.
Extreme times that we don't want to court. So I don't think we couldn't have a framework where we're going to bring prices down by 10% or something. That's not something we'll be looking at. We're essentially looking at the best way to foster 2% inflation over time. And the things we did back in the changes we made in 2020 were really
Looks like Band-Aid is off. We might be done for the moment.
near zero. Now
Now, if we go risk off into the close, two downside targets, 522,
deal with that, but perhaps
48, and 520.09.
where you're dealing with the effective lower bound, and that would be a framework that looks a lot more like the one that we had before 2020.
Just check this, make sure I got this right here.
Tools you brought in to deal with the zero lower bound was quantitative easing. But you've also used quantitative easing to fix disruptions in the financial markets. Are you going to be more specific about what your objective is with quantitative easing as you go through this review?
So in the beginning, it almost
Right down here, this one right here, and then the last one would be
with the global financial crisis and with the pandemic, and we did try to explain ourselves through the pandemic, and our explanations did change. But I think it's fair to say we might have done a better job of
right around there.
why we were doing, and that's something that we're aware of and looking at.
I mean, no discussion is complete without talking about AI.
Yeah.
With AI coming fast, and
Chip talk now, AI talk.
affect productivity, it could affect employment. There are some people who say we will see for the first time technological unemployment in a serious way with AI. What are your thoughts about it, and how will it impact the Fed going forward?
So like everyone who's been exposed to what it's capable of, it's beyond, I started about thinking about it as like a better version of Google, but it's not. It's like a better version of a person, it can do amazing things. And so the question is, all through the 250 years of technological innovation, technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been
Hourly being bought right now.
in the short run, but in the long run, what it's done is raise human productivity.
531.52.
So is this going to be the case where it eliminates more jobs than it creates? And we just don't know. I mean, you come back in 20 years, will it be the case that just people are much more productive in their work because of AI? Or will it be the case that AI has just replaced a lot of people? And I think it's very hard to say, but it truly is remarkable in what it's capable of. And it's, you know, we had a demonstration by a Wharton professor recently, and you speak to it like it's a person, and it kind of responds like a person.
We already hit this one over here, so.
Really amazing. By the way, this is early days. You know, they're talking about even the next couple of years will bring more dramatic breakthroughs. So I think it's one of the 2 or 3 things most likely to bring dramatic change to the economy all around the world in the next 20 years. And I'd say very hard to say how it shakes out.
Let me turn to your job. An important man once said of your job, it's the greatest job in government. You show up to office once a month and you say, let's see, flip a coin. And then everybody talks about you like you're a god. What is it that you normally do every day in the office? Is it fulfilling and, dare I say, enjoyable? And do you really feel like a god?
So I would agree. I think it's the best job in government. I would agree. I really do enjoy it. Yes, I love the job. It's a great honor to serve. It's quite humbling because, you know, everybody makes mistakes. It's just the economy is just not very predictable. All of that is true, and I do what everybody expects me to do. I read. We do a little more reading though as part of our daily. My colleagues and I do part of our daily regime than a typical executive would do. In terms of being a god, I would say that we are blessed with a large number of amply compensated critics who would kind of tend to undercut that. So we don't feel like a god.
So let me go to the more mundane. In that office, what are the key indicators you look for? What are the sources of data that you go to as you try and make up your mind?
So, you know, I'd say
I'm going to leave this wide here.
More labor market, better reliable labor market.
This squeeze is going to be here the entire time for a squeeze higher, but
Payroll, it's wages, it's participation. You can break all of those down in different categories. It's a million different things. So there's a lot of labor market data. It's a great field if you're going into economics because there's just so much to do. So and then we look at the inflation data. Also, I keep track of global developments pretty carefully, and I talk to my global counterparts pretty regularly just to stay aware of what's going on.
Here's the beats. We didn't beat it.
Are really important, and you know you can and lately something that we're paying close attention to, as you would expect, what's going on around the world in currency markets and fixed income.
Shit is gonna hit the fan.
For me, though, my background was more in the private sector and you know, as an investor. And
Yeah, tell him how you blew up a bank, Jerome.
And I have
Tell him how he sent a bank, you may put it back to bankruptcy.
what they're dealing with for it to really kind of fit together for me. I can look at only so much data, and but to really get the story and the narrative, it's more talking to outsiders and anecdotal data does help things kind of fit together for me, I would say.
Yeah, you told us about speaking with business people last night and getting a sense of what was going on in the Midwest. Let me turn to Fed independence. You've reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law. Congress has, in our statute...
He's setting the precedence right now. He's spoken about this before, but
seemingly endless term.
He's making his case right now.
So we're protected in the law. So, you know, Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the Hill. So I think that's not a problem. There's a Supreme Court case people will have read probably in today's journal at which the Supreme Court may decide whether independent agencies generally, whether their authorizing laws can contain a provision that prevents the president from firing.
This is why he did this today.
Other than for cause. And that's a case.
Questioning Supreme Court's ability to enforce rulings.
It's a situation that
which would open the door to the federal or the executive branch
widely understood
having the ability to exert
where it really matters.
Direct control over the Fed chair.
And we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to achieve our dual mandate goals as we can to best serve the American people. That's the only thing we're ever going to do. We're never going to be influenced by any.
So the Wall Street Journal put a piece out about this today. Most of this is known or was known. If there's been talk about it now for months.
Political or any other extraneous factors.
So the Fed is an executive branch appointed position without direct oversight. So think of it like this. I can tell you who's going to be the chairman for how long,
I know the question.
but the Fed and the little governors, little presidents, they can get their data where they want to. Like they go out and get their own data, collect it, and they disseminate it to you. The executive branch right now is trying to exert or assert that they have more direct authority over the Fed, where they might provide the data to the Fed and tell them how to use that data. So two key differences, right?
Kids and my grandkids, and I go to the
instead of being an independent-ish agency.
We need you healthy.
We know that right now Trump is questioning if they have to follow, if the White House or executive needs to follow what the Supreme Court rules on. Jerome seemingly laying out his case, and the Wall Street Journal beginning that process publicly.
Of Chicago. Thank you, Chair Powell and Dr. Rajan, for such a wonderful conversation. You are.
Jerome's like, get me some fucking bourbon, please.
All of us can see.
The shit is gonna hit the fan. I haven't seen Trump say anything yet here.
And thank you for sharing your important insights.
Not a whisper from Trump. Are we getting a presser at 4 o'clock today? That's what I want to know.
ECC team for pulling this.
I want to know if fucking Trump's going to go off the handles today. So here's SPX Gamma. We hit the target down below here. If you want to go see it. Now, we have not broken 5250. Which we shouldn't. Or not shouldn't, but I want to explain this to you simply. So this is where 2-date Gamma rolled into was 5250. If we begin to break below, listen closely. If at any point we get real money selling and we break below 5200, puts will be monetized and rolled lower than 5200. We're not there yet. We're not there yet. But if you get panic, it's going to get fucking messy. So this 5200 is key. And I'm going to show this to you right now in the background. The first thing that I want to show you is SPX net gamma. Here's 5200. This right here is 5200. We just traded 5250. So we just came down here, swoop. We're going to check to see if we reject 5250. And if we break below here, you're going to see a bunch of put buying. And I'm going to explain this part of it to you in here in just a moment. So here's the panic. We switched yesterday. And began to lose support this morning. So here's 5250. Here's 5200. This is two-day gamma. So we just swung down right here. If we reject this and start coming here, you're going to start to see more and more and more puts being bought. Lower and lower on the interim. Now, I want to show you one other thing here, if I can. Try to keep this simple for you. Thesis here. Come up here and trade this 550 and even 552. Sitting on support. And what I really want to show you is I want you to come close here and watch this. The break this morning, this candle right here, this is today, 4 a.m. Right, here's Wednesday, and this is also 5 a.m. failure to go higher. And a failure to regain this morning at 12 o'clock and at 9 o'clock. Which means we switch to this upside move to a major failure. And I really want to talk to you more importantly about this. This is where it gets important. You have an expectation of at least trading 550 and possibly 562 right in here, right? You know you're going to fail here or here. But instead, we took the failure even lower. This is extremely bearish. I want to show you the rest of this. If this is dead, we now move to this being red. Remember the rule that you break below and you're looking for the new low. If we reject 535 right here, if we reject this, and this is the low in the market, here's 481. Bottom buyers higher, expectation. We're going to go up and attempt to trade this prior high right here. If we reject this now, it tells you we're going to trade this 500, more than likely the low and new lows to the downside, because the way is not higher here, not here, and not here. This is now considered just a squeeze, and we'll be looking for lower lows, major lows. Now, we don't know this yet. But we want to be watching for is a rejection. And a new low. That's it. Whoop, hold on. That's it. That's all we need. And you can see that the hourly trigger and the half an hour trigger is coming down. And there's your 520 right there. And none of that conversation was productive for more up. At this point, I don't want to scare you, but there's a fair chance of a crash over the weekend. Fair chance of it. And I don't mean like this and all this over here or the 500. We're going to have to wait for the response to all this Powell stuff. But watching CNBC already running, I've now seen 3 articles from CNBC running the don't panic, sell your retirement fund type stories. I just saw another one. I'm retiring my own it, don't trade it mantra on 2 of our biggest stocks. So they're going to attempt to not panic you over the weekend, but price target 457.18. Let me just check this really quick. Let me get a better target here for you. Hold on. Price target 473.20. 473.20. 458.96 on the low. We're going down here. Definitely going down here. If the way ain't higher and we reject, this is where we're going. We got to wait for the rejection up here. We just got to wait to confirm it, but we are definitely trading it on a rejection. And there's the rejection right here. Didn't even get up to it. Told no. Now, this isn't confirmed yet, but we're going to confirm it or unconfirm it. I'll get rid of this for a minute here so it's not in our way. We're going down, baby. Two 2:39 in the afternoon. R5 520.67. $522.44. SPOOs with a new intraday low at 523.86. Note that you're going to get a reaction as we approach 52.50. Right in here somewhere, you're going to get a reaction right here. We're close to squeezing. Be careful. White House press secretary, no shit. White House press secretary holding a conference at 4:30 after a market close. There's real risk after this close. If Trump is, I'm going to tell you guys something. I went through COVID with this fucking guy. Like, this guy's going to be fucking bananas. There's a press conference today announced at 4:30 p.m. I'm going to leave the stream up today at 4 p.m. and I will jump back on the stream at 4:30. I'm going to take a quick half-hour break, but I will be here for that 4:30 presser. Two notes here. I fucking wish it didn't come to this. Two notes. I will be here for the presser at 4:30 p.m. If we begin to that's not elevator. We start limiting down today through the weekend. Anytime from now into Friday or Thursday or Sunday or anything. If it's middle of the night, I will come on the show. I wake up every night. I watch 9 o'clock, 2 a.m., 4 a.m. every day right now. Every fucking day I do it. That's why I'm stressed out. I don't sleep. So I will be here no matter what happens. I want you to be aware of that. If you're in the middle of the night and you're watching us start fucking doing this shit like we did in COVID, I will be here with you, and I'll put the stream on in the middle of the night. We can trade it together. If you don't have a futures account, you must get one. Things can get really spicy around here if we cannot quell this speech from Trump or from Jerome. My first take off of that speech is something is going on in the background that's more serious, where not only is Trump testing the Supreme Court, but the word is probably getting to the Fed that they're going to assert that authority more fully. And Jerome likely said, fuck it. I'm going to tell the public what the real deal is. And I want you to think about this. This is something where he's supposed to be considered more trustworthy than a banker, more than Jamie Dimon, more than anyone else out there. None of your politicians have told you this. None. They said, this might happen, that might happen. It's possible. We had Dimon come out and say, we're getting a recession, then rescind it. This might be the only neutral party, that for whatever reason figured, fuck it, I'll tell them. And a lot of the bullet points that came from that today will not be easy to dispel. This will be a major discussion everywhere because he hit on things that are potentially in your lifetime altering. It's not like I'm telling you, some asshole on FinTwit's telling you, CNBS, even Diamond. He is addressing the concern that you could have a fundamental shift in our economy. When you make statements like that, people panic. I'm telling you, people fucking panic. So if we see a panic over the weekend, it's possible. It really, truly is. And I don't want to panic you or sound like a bear or doom and gloom. I hate that. You guys know I'm a permabull, but I got to warn you that is a possibility. Probably a 30%, 45%. That's high. That's very high of panic over the weekend. tonight, tomorrow, weekend. It depends on what the response is to his statements today. Because this is the only guy. Who you got, no matter who you are, MAGA, Democrat, Republican, I don't care. Whatever you are, this is your supposed to be your neutral person. Like him, hate him, I don't know. I don't know why we're here right now, but there must be something going on in the background. Because you rarely hear things like this. This is the counter, the direct opposite to what you heard during COVID. You're all alone, you're on your own, and there's nobody there to help you. The shit winds are coming. If you think the shit winds are coming, this was it. This is a moment where, in Trump, dude, he ain't gonna like it. He's not gonna be happy. I don't see any tweet. Maybe there's a new tweet from him. Yeah, I don't see any tweets from him. Nothing. He got off the toilet bowl and he's pissed. Guaranteed. Guaranteed. Oh boy, this is gonna be fun. You didn't get a Trump or a Fed put. You got a Fed. I'm calling you out. That's what you got. And Jerome was not apolitical. I'll be honest with you. Right away, he said he quoted Ferris Bueller. Right away, it told you things change quick. He's not supposed to make that commentary. He isn't. He's telling you that he is aware that the economic conditions are changing fast. God, I hate saying this stuff because, like tonight, like you know how it usually is, right? Usually you're like, oh God, this is bad. And then like 6 hours later, it's all over. It's fine again. So please don't get mad at me if, I don't know, Trump does something today. I don't know, trade war over. Don't get mad at me as the messenger. I'm just the messenger here. I'm trying to be impartial to being the messenger. Don't be like, oh, Cap said we're going to crash over the weekend and we're up fucking 500 points. We'll be like, he's wrong. I'm just trying to get through to somebody who's not aware. If you're out there right now watching this show and you're like, this is going to be fine. This is not fine. This is not normal. None of what was just said is normal. It requires now an official response. And it requires the public to believe that official response. Because it's coming from someone, like him or hate him, that is respected. You're going to see politicians quote this shit. You're going to see the opposition quote this shit. You're going to see people use this and bend this to their will. So be careful out there today, tonight, and the weekend. And I will be here. I'll if I have to stand all night long or some shit, I will. I promise you. I'll be here with you. So just beware. We could start laddering down. It's very dangerous here, and we could squeeze violently. If you don't know how to trade something like this, and let's say you close short already, just wait for squeezes. Every time we squeeze, jump back short again. And just fucking diamond hand. Yesterday, I gave you a hedge. Remember in the stream yesterday? I said, I think we're going up. I said, buy what? 500p for Friday. They were 17 cents. You might get fully paid on those. Cheap hedge, right? To this kind of an event. You can't predict this shit. I can't. I don't think anybody can. Unless you know something, you have insider information. Stuff like this, man. Like this is the norm de rigueur. I don't know if I'm going to make it through all this with you. I swear, like 4 fucking years of this, we're only in fucking 3 months. Like, I don't know. I'm going to look like all these presidents when they're done after 4 years, like crippled and broken down if I'm even alive. I just got told I might die. Fuck. Like yesterday, man. Yesterday morning. I had a medical emergency yesterday or Monday morning. I'm serious. That's a fucking serious as a heart attack. I'm sure it has to do with this shit too. Some of it has to do with this shit. Fucking stuff of nightmare fuel. Sorry for freaking out like that for a minute. So here we go. Look for some risk off into the close, downside target into the bell or after hours 5. If we can get down there, I'd like to see at least 522.46 and maybe some more blood after the bell here. And I got to tell you guys one last thing. We were discussing this early this morning. I couldn't jive what these banks are saying, and I was explaining this to you. These fuckers will leave you holding the fucking bag. They're evil scum. Banks are scum. They will leave your ass dragging it behind you. I went to fucking Burning Man when they were burn Wall Street shit, right? They left everybody holding their dicks. They didn't tell a fucking soul. So don't ever discount all this bullshit from JPM and B of A and GS. If you go back and read the plan for 2025 in that outlook, and you look at what they wrote about 26 and 27, it was get the fuck out of the market. So if they're fucking doing that now, and Jerome Powell's, invariably opening the can on that, watch the fuck out. Truly. I wouldn't say that without Jerome saying that shit today. Jerome, man. Jerome fucking, it's not just like trust me, bro, anymore. That's better than New York Times, WAPO, CNBS, even Jamie Dimon. That is the chairman of the Federal fucking Reserve warning you. When I told you earlier today that you could buy something and it would go down in value, he said that today. He said nothing is sacred. That thing that you invest in or wherever that money goes must bring you cash every month or you're going to be fucked. So like, let's say I buy a house for 200 grand and it blasts down to 100 grand. There's still rent coming in. Is that easier to explain it to you like? Not being literal, I'm being trying to be illustrative. Are you going to buy SPY and have it not pay you rent every month? You have to be really careful if we're actually heading into this economic change. And Jerome is admitting that today and said conditions are worse than in the Great Depression. Potentially, if we continue down this path, you would need to rethink how you're an investor completely. And if you're a petite bourgeois, you will not survive. You're a petite bourgeois, you will not survive. You think you will, but you won't. They don't survive. U.S. Treasury Secretary Bessent firing back on China. Iran this time. The U.S. is ready to get Iran's energy exports to zero. Crude blasting up to 62.21 right now. salvo is being fired by many different nation states over oil today. Timu after the report that I gave you earlier of Hong Kong. I'm going to be doing a fucking World War III show, aren't I? Timu slashes U.S. ad spending, plummets in App Store rankings after Trump-China tariffs. Hong Kong also announcing no more flights for packages into the U.S. The U.S. Postal Service, if you remember or recall, originally canceled package delivery. China, though, firing back. Ugh. Yeah, let's do a live stream. Everything's gonna be great. Did you consider you're going to have to live stream the Great Depression Part 2? Nope. No. Never thought that. Can I quit? Nope, you're locked in here with us to the bitter end. Fuck. I kid. My humor is dark. 3 p.m. SPY bleeding more. You know they're going to be rolling. Puts are going to come rolling in. Phones are likely ringing off the hook across the U.S. right now. Bob on Main Street's like, what the fuck just happened? My 401k, bro. It ain't ever coming back. Think about that. Ever. If your funds managed, you might get money shorting this whole fucking thing, but your stanks aren't, or your ETFs are not. Mine aren't either. I'm fucked. I got to get the fuck out the first chance we get, if we ever get a chance. I got to hope and pray this year and sell shit tons of calls. Now coming down, blasting down into the target of 522.44. Currently trading 522.71. Looking for a break. Looking for a new low right now. This will give us an idea if we're going to roll down even further. Going to remove this target right here so we can watch it. So we can break down and get a new low. Trading 522.90 right now. Losing 520.50. We are now in the money in all the 2-day puts. If we do break 5,200, we're going to roll puts even lower. Remember, if the way is not higher, I teach this on the show, right? If the way is not higher and we're not testing a higher resistance, if we're not going to test 62 or 55, you know what that means, right? It means the way is lower in a bigger way than the market low. SPY down 2.71% right now. Hammock trying to do damage control, making a statement that if growth falters and inflation eases, I think this was from this morning. Forget that headline. Scratch that. The Fed does not have those tools. That is the truth. I want you to realize something here. The Fed can only cut so much unless we're talking about going negative rates. We haven't heard that discussion in years. Going negative. We only got so many cuts out there, boys and girls. We got corporate bond facilities, we've got QE, we've got not many cuts left. And then you're talking about slipping back into, modern monetary theory, baby. If we're going to change our economy, that ain't going to fly, is it? That shit doesn't jive. Mm-mm. Still not seeing any Trump commentary here. Timorous coming out and talking about the Fed's independence. So you've got the WAPO article earlier today. You've got the Fed and the speaker acknowledging WAPO. Timorous coming out to defend the Fed today. So this must be a point of contention. At 4:30, you're going to have Trump coming out. You know the shit is going to hit the fan on this. The shit will hit the fan. Trump is going to question the Fed's authority, guaranteed. They're going to go to war over this. It's going to become public. SPY now showing the way lower to 520.14. Proofing the way to the downside right now. Market panic reigns after that Fed speech. Trading 522.12, 522. Need to get those 500 Ps up and running. 505's trading 70 cents right now. Yesterday we talked about buying 502s, 503s, 505s. SPOO's losing 3250. We're heading down to 5200. 5225 and 5200. We've got a small bar at 5225. Next major bar, 5200. You'll see rolling of puts even lower as we head down to 5200. SPY down 2.91% currently. You're going to look for a rejection here underneath this yellow bar. Downside target 520.13. Note that at 520, hold on a second here. I'll give you a squeeze point. Panic, rain. Panic at the champagne room. Panic ruling the day. And we have more after the show today at 4:30. Trump will be live. I'm going to leave the stream up. I can't turn it off. I can't turn it off because it'll fuck up the internet and shit. So I'm going to leave the stream up from 4 to 4:30. I'll come back on. We will listen to Trump together and watch the ranting and raving. If we break 520.14, we are going to lock in trading 500, another 200 points. I think in total, it'll be a total of 400 points. Target 520.14. There is an S5. This is a full 2 sigma move on the day. 520.77. SPX trading 52.29, looking for 52.25 for a bounce. We're getting close. Take a little bit off as we approach here. That's a 5-minute too, not a 1 minute. I'm going to change it to a 1 minute target. Watch out for a squeeze soon. There's a small little road bump right here. You're gonna get a bounce here. I should have drawn it like that. Sorry for drawing it so low. That was the ultimate move. This looks wonky as fuck, doesn't it? SPY reacting to 52.25. Now 3:13 in the afternoon. Panic at the Disco.
So US stocks falling further now. The Nasdaq down 4.2%, S&P 500 down 2.9%, and the Dow down 2.1%.
This could be a local bottom here. We want to watch this red box. SPX trading 52.40, trying to regain 52.50 right now. If you want to take one more, you're looking for a new low right here. We're not there yet, though. The entire 10% move erased. The only question now is to go down and retest market lows. I'm going to buy some calls here, to be honest with you. I shouldn't be feeling like that right now. But I got that feeling. SPY hasn't given it up yet. Apple did. No, wait a minute. I said that 10% move. I was wrong on that. Erased the entire move from Friday, I believe. Sorry, I was looking at the wrong ticker here. Watch out here for continuation to the downside. This new low right here, implying that we're going to move to the downside. You wanted more blood. It's coming up right now. Just waiting for a quick failure here. SPY reaching down, attempting to put in a new low. Need to see this new low, by the way. Trading 521.02. I gotta go pee really bad again. I gotta I sit here for like 6, 7, 8 hours a day with you guys. I gotta take a pee. I'm sorry. I mean, I know it's exciting and shit. I gotta take a pee. Be very careful of a few things when I go potty. This is the low. They're getting really kind of spicy down here. There's a lot of demand down here, so it's gonna get weird. But the thesis here is that we're going to trade the lows of the market. So we should be piercing through this stuff either now or into end of day to unlock the door to 500. So 520 should get broken today. Give me like 5 minutes, okay? I gotta go potty. I gotta go to the bathroom. SPY being shanked right now. Jesus Christ, like I haven't been drinking, but I'm gonna need a goddamn bourbon after this. SPY blasting down into S5, 2 sigma move, opening the door to the downside to trade 520.13 all the way down to the depths of hell. Am I allowed to have a bourbon? I don't even know if I should. First target hit. Next target, 520.14. Spoos blasting through 5225. New target downside, 5,200. Panic at the Disco, baby. On a weekly basis, we're just under the pivot point. Whoo-wee. Oh. S1 on a weekly basis, 494. We are now negative on the week. This weekly close is going to be fucking ugly. We still have one more day left, but we are underneath the pivot point for the week at this point. Ugly, 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 ugly.
The Japanese yen rises 1% per the US dollar, a fresh 2025 high now.
The nasty weekly candle close is coming up right now. One more day left for the market. I think I gotta buy calls here for tomorrow. I still got calls on and I got puts on. I closed the puts. My calls are fucking dead. I just lost 30K. I just made more though on puts, but I think I'm gonna buy calls for tomorrow. $500. I mean that. $520. I wonder if they park this shit into tomorrow. We just closed all the gaps here on VIX 9 day. We talked about closing all these gaps on VIX 9 day. We just closed them. We're now trading into the hourly trigger on this. Talking about a moonshot here. Let's start crashing here. We have plenty of room to crash here. No calls for me. We might crash overnight here, guys. I don't know if it's crash. I don't want to say it's crash because it's not really a crash, but VIX 9 day looking bullish as fuck. coming into expiration. SPY now squeezing off of 520.63. Coming back to check the 1 minute trigger. This is now lower. SPY with another squeeze off 52.25. First chance we've had of a trade to the 5 minute trigger. Still rejecting. Five-minute triggers at 525 on SPY up here. Watch out for a squeeze. Still haven't broken higher. Need to see the high, the break higher here. I'll put this in as a dotted line because we haven't proofed it yet. You want to see a new high right here. Waiting for a new high and a quick back test. Just waiting for this right here. I think we just got it. Watch out for a bigger squeeze. This one's valid now. Trading 524.09. Second test of 52.25. Market not able yet to get down below to 5,200 to roll puts. Not now seeing 2-day puts coming out at 5,200. We still have a major magnet today to the downside to 5,200, so be careful here. This is still extremely bearish. Oh, yeah. We're looking. Oh, yeah. We're looking to trade all this right here. Woo. We're looking to wake up tomorrow morning at 9:30, trading 5,200.
A Hamas official says the group refuses to hand in weapons.
Try to tee off right up here somewhere.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
We're looking to reject 5,250 to trade 5,200 by open tomorrow. We ain't done going down here. And don't forget, we've got Trump after hours at 4:30. Not a whisper that I can see from Truth Social Donald Trump posts. Nick Timmeros just ripping off tweets all afternoon. Punchbowl not saying much. There's talk about the dollar losing its reserve status. After the automotive comments from Powell, Ford told dealers it may raise prices in May if tariffs continue. It's now 3:39. Don't forget we've got OPEX tomorrow and Vixpiration. Could see like a continued downside, but a rip higher into tomorrow. Sometimes when we get these Vixpiration days, you get a blast down the day before and then a rip face higher like nothing happened. Be aware of that. Expectations for tomorrow. This is going to be a tough one to do here. I mean, yet. We haven't broken a new low in here. We're holding this 525. You got to understand that we got to hit 5,200 to trigger new put buying. A lot of this is going to depend upon sentiment, expectations for tomorrow. Further downside from Trump. But a trade into cash market tomorrow. To 530. Just be aware of a monster squeeze in here. You're not gonna take this back here, I don't think. That's gone. Yeah, all that's gone right here. Just note that there's squeeze risk. See your hourly trigger up here? Squeeze risk into tomorrow. Price target 528.61. Now, I do want to warn you that of two things. First one would be sentiment reaction after hours, blast down. You have to be able to hedge that. I can't predict this. Nobody can. Otherwise, if there's quelling of danger, you might get a little bit more risk after the bell. And then a long up here tomorrow to close the week out at 529. And also where the hourly trigger will be. So you can see the hourly trigger right here. That will continue down into tomorrow's open. That's the half hour. That's the hourly. Upside move into tomorrow, 529 target. I'll draw it like this for a minute. Hold on here. We need to get under this 20. So just if I can explain this to you for a minute. To trade this 500 down here, right? Like, watch me close here. There's two actions that could happen. The first one would be where we actually break through 520, get the signal to sell with a new low, and then we take it down, okay? You have to break through and you have to get the new low to take the trade. The second one would be where we come up, we reject the hourly trigger, make the new low, and then we're on our way to the downside over here. This Trump shit after the bell's going to matter. If we get the low here, we could start staircasing down overnight. I will say to you that VIX looks like dog shit. Even though we've got VIXpiration, I want to show you this. Even though we have VIXpiration, I want you to see how bullish it is here. So first scenario would be Trump talk, weakness in SPY, and then sell it down into VIXpiration. Maybe ramp up over the weekend. And there's your real crash if you want one. Get it? Trump bad. Cool it off tomorrow and then super ramp over the weekend. There is scenario 2. If Trump can't quell markets, you've got a major hour, half hour, daily trigger here. And you've got on a 30-minute basis extreme bullishness on the hourly. That's bullish. When it looks like that, you could see the market crater overnight. We just keep ramping. And I mean fucking ramp into expiration. It's hard to call here because it's more of a if this then that. So what I would say to you is take it as it comes. You take the squeeze up here. You go risk off into Trump at 430. Right? Maybe we even squeeze up here, go risk off into Trump at 430. They blood it down one more time, and then you get in long for tomorrow, unless it's poorly received. I don't know what Trump's going to say. I'm sure they're panicking right now. I don't even know if they're going to show up at 4:30. I guarantee Trump didn't know this was happening. Guarantee it. This was sabotage. There ain't no way he knew. So right now they're planning this presser at 4:30, and if you try to put something like that quickly together, you're going to get heated people. You're going to get Donald Trump gets heated, doesn't he? He goes off the fucking handlebars. I haven't seen shit from him. Maybe he has made a post that hasn't posted on Twitter yet. I don't have Truth Social. I only have the reposter, so maybe he has made commentary I don't know about. But, they go off the fucking handlebars. We've heard them go off the handlebars, and now they likely have to address Wall Street Journal, Timorous, Jerome, as well. So, and the litany of other things here. Did you vote for a recession? Possible recession? Did you vote for a depression? Those are all important questions, right? We remember that earlier conversation from Musk in particular was, well, the market might go down. We may risk a recession, but we should be able to pull ourselves out. Conversation now switching to real risk again. Conversation switching to a neutral, we think, neutral party saying, no, you're looking at a depression. Those things will need to be addressed, and people will need to be assured, even if you like Trump. That's not what was agreed upon, right? It doesn't mean you don't want to vote for him again. You're not going to trust him or back him up. Just saying the agreement wasn't, hey, we're going to make a depression, right? Nobody agreed to that. Even if you're like, oh, I knew, bro, that was going to happen. No one cares about you. No one cares about me. Talking about the society at large. So we'll watch this closely. It's now 3:49. I will be here with you when Trump or I don't know if it's Trump or if it's press secretary. I don't know if they're going to let him out there, because when he goes off script, if I was a Trump advisor, I would say, hey, boss, just hang out. I'll go out there and I'll talk to him. You never know. I went through COVID with this guy. You can't fucking
imbalance.
Like even my MAGA friends, I'm like, okay, what's your take today? Because it changes from day to day, doesn't it? You have to admit that. So you know what I mean? Like what's the nom de rigueur? Ask a MAGA supporter right now. What's Trump gonna say? That they don't fucking know. They're not going to answer you until Trump comes out and speaks, which is fine. I get it. I do. I get it. I got something over here. What the hell is this thing over here? Just like a dot I drew. It was like small, and now it's big. My fucking account looks like a disaster, like a bomb went off in it right now. Like, I don't even know. I just looked at squeezing higher now, trading 524. pop it and lock it on the 5-minute trigger.
Now to the market.
Hopefully you close puts.
The S&P 500 is a buy side 650 million. A Nasdaq 100 buy side 1.8 billion.
Target's 529 tomorrow. 529.
Buy side 730 million.
Don't trust this squeeze in either after the bell at 4:30. Now trading 524. Coming up to test the red box. Next target, 526.43 to the upside. We got our first tag here. You want to break higher. If you want to take another trade, it's like this. You wait for the push higher, which we just got. Wait for a pullback. Watch this white thing here to take that trade higher. Let me pull this back a little bit. It should be violent, like straight down red bar and then up. Like violence. Nine minutes left. 529, the target without Trump volatility after the bell. I can't account for Trump after the bell, guys. Like, I can't. You never know what he's going to say. I mean, he could say something to make this market go to fucking 600 tomorrow. Or he could tell you to go fuck yourself and fucking burn this shit down to the ground. You know, you got anybody out there remember those 5% down nights and 5% up mornings? I do. They were nightmare fuel. This is a perfect example, to be honest. Like you're buying the close on a Trump discussion. So comes out after the bell and he tells you, fuck you, we're going to burn it down.
Any issues?
Market craters overnight. He comes back out and has another presser at 8:30 in the morning.
Too hard refresh.
And he tells you he's thought it over again and he's going to fix the market. I'm serious. Like, this would not shock me to squeeze high or after the bell. He bloods it down and then he comes out in the morning and tells you everything's going to be okay. I'm serious. People telling me the Trump trade didn't fucking matter. Beginning of the fucking, when he got president, people were screaming at me saying, that doesn't matter. I'm like, yeah, okay. We'll see. Oh, fuck. Let's go take a look at Bookmap really quick. Oh, hold on. What am I doing here? Let's see if there's a bar higher here. We can try to look for some supply on high. Yeah, that's where that yellow, see that red box up there? That's where 526.50 is. This is 526.50 on SPY. See if there's anything else higher than we can pinpoint. Remember, too, we've got mechanics of expiration tomorrow. Don't fuck around with that, man. You get the one big down day and they reverse the whole entire move. We'll leave this up right here for you. And I'll leave the stream up. Remember that. Expiration, don't fuck around with it. They will swing us all the way to the depths of hell and then right back up again. We got a lot of stuff going on. Somebody said earlier today from the bank, one of the banks said there's so many mechanics running that you can't keep track of all of them at the same time. SPY now trying to trade 526. Target upside 526.57. Half-hour trigger sits at 530.98. Hourly trigger sits at 533.18, but those will be lower tomorrow morning. They will be lower. The red bar is right there. Put this so you guys can see it all. We put this no, you're not going to need SPX. If you want to see SPX trading higher now to resistance, or not to resistance yet. Gonna get rid of all these down moves. SPX closing target 5283. 5300 if you're feeling juicy with it. Failure to get below to 520. Failure to show the way to 500 as of yet. Looking to trade up into the hourly trigger to confirm or deny a leg lower to make a new low on 520. Pay very close attention to this movement here. You want to see if we break above or not, or if we fail. This is going to tell you what happens after the bell. I would be risk off here regardless. Take the money and run like right now. Don't do this FOMO bullshit up here. There's no point. They can blood us straight back down again. If you want the trade to 29 in cash market, you have to see the break higher, the hold, and the new high to take that long right there. Can't take it unless you see that action. Danger zone right here. SPX trading 52.77. An attempt to trade 52.80 into the bell here. No door open to 500 as of yet. No door. Needed to bust through 520 and then make a new low to show the way to 500. Need more vol. I'll be back with you at 4:30. I'm going to put the Captain Jim James logo up, and I'll be back here at 4:30 with you to watch as this plays out. I'll put futures on. We'll start watching ES, and I'll chart ES out for you in this stream so that you can watch it in the overnight. I will give expectations at 4:30 for ES. Fuck me. And we'll trade that reaction. Another note, one more time for you. I will be monitoring futures all night long. If we begin to elevate or down at any point, if the market begins to panic, I will come on stream. 2 a.m., 4 a.m., 9 p.m., 2 a.m., and 4 a.m. Is when I'll be watching closely. If it's like a little bit of down, you're not getting me on. It has to be something that looks like we broke. Like if we break 5,200 and we make a second low, I'll do a live stream for that. We'll trade it down together. No new high on that. Expect that downside move here after the bell. Got the squeeze higher. Look for this down move after at 4:30 to the downside. Showing caution right now with no new high here. I guess if they got a successful back test, that'd be okay, but not seeing that new high does not, I don't like seeing that at all. They got a few more minutes to do it. If they can poke their heads up here in the AH between now and 4:15. I'll leave this up, this 4:15 for cash market, because they can get freaky with it. They got time here. I'll be back with you. I'm going to leave this over after 4:15 here, because they can dick around in here. They got time to dick around. I'll be back with you at 4:30. I do want to show you this last bar up here. This just came out. See that one? That's the trade to the hourly trigger up here. And I'll be back with you guys in 1/2 an hour. Also, I'm going to put the financial juice on here for you.
Trump, on a Fox Noticias interview, says we're looking at Venezuela very carefully. So again, Trump currently speaking on Fox Mexico interview. So we have posted Trump's interview on Fox Noticias on the feed for those interested. Keep in mind, so the interviewer is speaking in Spanish, which is then translated to Trump, who replies in English. We have posted out the US Treasury International Capital Data February report on the feed for those interested. So the US Treasury's cash balance at $600 billion amid tax-related inflows. So Financial Times reports that the US places sanctions on Chinese refinery over Iran oil purchases. So the Trump administration has imposed sanctions on a Chinese refinery for buying Iranian crude oil, as Washington increasingly pushes Beijing to rein in oil purchases from the country to increase pressure on Tehran. So Financial Times did report this piece around an hour ago now. Just seeing it picked up from the wires here.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So keep in mind, in 10 minutes' time now, at the bottom of the hour, we saw reports that the White House is due to have a press briefing at 4:30 p.m. Eastern Time. So following the close of the US cash equities markets, just looking at the market wrap for today's session. So warnings from Powell that trade tensions could undermine the Federal Reserve's employment and inflation targets sparked more turbulence on Wall Street today, with equities resuming sharp declines and haven assets such as treasuries and gold surging. 2 days of relative quiet were interrupted when the Fed chairman signaled a wait-and-see approach with Trump's tariff offensive, deflating expectations that he would intervene fast to reassure the markets. Stocks extended their losses, which began earlier when two major semiconductor companies disclosed profit disappointments connected to the global trade conflict. The S&P 500 today sank 2.2%. Technology stocks took the brunt of the beating, with the Nasdaq 100 tumbling 3%. The White House imposed new restrictions on Nvidia's chip exports to China. The yield on 10-year treasuries fell around 5 basis points to 4.28%. So again, keep in mind at the bottom of the hour, we are due to get an evening press briefing from the White House. We have got a live video on the feed for those interested. It has started, but Levitt is not yet at the podium.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
So again, we are shortly expecting the start of the White House press briefing. We do have a video on the feed for those interested.
Sorry about that. I got roped in from my wife and children. I'm turning you guys off now. Let's see if we can overhear what they're saying here.
There's a second one underneath you, I think. Yeah, I think that's on your right side. On that white stool underneath you? It's on your right side. Yeah.
I need a bourbon. Actually, I can't.
Is that better?
I'm going to switch to ES and chart ES. Is anybody here? Yeah, okay, so people are here. I don't know. They said that Trump was on a Fox News Mexico. So I don't know if we're getting... You guys are here? Good, good, good. I can see the chat scrolling. Can't see what you're chatting, but I can see the scroll going. So I don't think we're getting Trump. He was on a Mexican, I think. Don't quote me on this. Spanish, Fox News, Fox Business Spanish, Espanol, or something like that. So I don't know if he was in Mexico. I don't know if he's in the U.S. I don't know if we're getting Press Secretary Karen or not. As we await whoever they drag out. This reminds me of when they dragged out, remember when Trump dragged out, there was another guy, like the other Besant, like they drag out Rumsfeld out of the air chamber. Like Darth Vader comes out and starts talking.
Right.
I don't know if she's going to freak out or not.
Did it say
I'm going to chart out ES for you for futures right now while she speaks. And I'll make sure you can get a screenshot of it so you can see expectations into tomorrow in case we have any, comedy. Stank market comedy over here in the middle of the night. And another thing for you is be very conscious. If you don't already, you guys know I'm a Democrat, right? If you guys, I don't like doing this. I don't want to follow this guy. I have to. But I do because I have to be objective and pragmatic in reality. I want you to realize that Trump could go on a tirade tonight. If he doesn't speak on Truth Social today, he'll watch Fox tonight and he will go on a fucking tirade. So be conscious of that as well. If it's bullish or bearish or hawkish or dovish or whatever it may be. So I'm going to do ES for you right now. And we'll talk about one other thing I want to note for you is we have not validated a downside move to 500 at the moment. We need to break 520 and get a new low. Otherwise, there's no path down there. So be aware of that as well. Even if that's glaring, yeah, we're going to crash. You still have to trade it from level to level. You can't be yeah, I'm going all balls deep on doom. You take it level to level. Not only that, they don't even price it in well until you roll into the next 10. So the best thing for you to do is always trade it level to level. Okay. Give me a minute here in the background. I'm going to switch this over to ES. And I'll start plugging away at it. Not that ES. And I have real-time futures, so I got the data plan. You guys pay for the data plan, I guess. This is ES, by the way. I'm going to die of a heart attack, I swear. This is the most even if you're for Trump, you can't say this isn't the most bizarre shit you've ever heard. I don't think I've ever heard a speech like that from a Fed chair, ever. I think I want to say the nearest closest thing I've ever heard like that was when Bush was on the state capitol steps, and they were whispering in his ear. You could see it on TV. was like, oh shit, this isn't good. Like they're whispering in his ear right now. It was very much like he was the time when he was sitting in the classroom during 9/11. You're like, when we're on camera and they're whispering in your ear, you know that it means something. All right, here we go. Yes, you do pay for the futures data, Floyd's Garage. Hold on here. Let me just fly through this while we wait. How about this? I'm going to switch over to the chart together. As soon as she comes on, I'll put her ass on blast, okay? So here's ES. I mean, look at that day. Woof. Now, the good news here is theoretically the week is not over yet. You should remember this conversation that we're having here. I'm not being rushed. The good news is, if there was good news for bulls, we have not violated 520, and the week is not over. I'm going to show that to you quickly here. We got one more day left. And this is the weekly candle. It looks like dog shit. This looks really bad. And it did violate the weekly candle. It did. We were not supposed to go down this far in a candle. We went deep today, almost to the bottom. Bottom 20%, never good. But we are in a mechanical part of the month, where if we're recovered, we really need to be above this one here, to be honest. We don't want no inside weeks, no indecision candles. We want to be up here. That 5,600 is key for progression to the upside. Even if we reject and go higher, we need to have that. And we're not getting it today. And I don't know if we get it tomorrow with the way today went. But you can't rule out the bulls at this point. You can't. On a monthly basis, if you can't rule out the bulls necessarily, on a monthly basis, at minimum, we need to be above 5,400. That was the jump point all week. Remember, I kept telling you 5,400, can't lose it, right? If we swept lower and went back up, that's okay. But if we go below it and stay under it and reject it, that's bad, bad, bad. So we're going to make this red on the monthly. This would be the target if we reject that monthly candle and that weekly candle up here. Here's your three targets: 5,000, 4,800, 4,700. PT1, PT2, PT3 right down here. Easy as pie. Not good, right? Make these green. And on a weekly basis, you can see it right here. This is the target. You want to know where we need to close tomorrow on ES? We need to close at 55.6250, just above it. Must close. I know that sounds comical, like, Cap, that can't happen. But, you know, it's the stock market. You can't trust anything. You can only trust price action. So I'm going to leave that up there. Must close the week above. Currently, we're trading 53.06. We look like shit, don't we? We're going to make this one red as well. We're actually going to make this yellow because we may be able to break up there. So make that one yellow. Make that one yellow for now. I said red because they're below it, but these are we'll keep remember these yellow bars here. And you can screenshot this when I'm done. We know we ain't going above there. There ain't no fucking way. We ain't going above 58.02 right now. That's a no-go. Or not now, maybe down the road, depending upon if we close above these two yellow bars right here. This is basically where support and resistance is. If you're looking for big trades, right? If you're looking for like a 1 month, 3 month trade, that's a long. And that's a short right there, right? Kind of see the range here in a weekly and monthly basis.
President Trump campaigned on the promise to secure our homeland and deport violent alien criminals from our communities. That is why the American people overwhelmingly reelected him back to this office, and it's why the American people defeated the Democrat Party in devastating fashion. Today, we have officially learned Democrat officials still refuse to accept the will of the American people.
Here we go.
Maryland Democrat Senator Chris Van Hollen rushed to Dulles Airport this morning to fly to El Salvador, potentially using taxpayer dollars, to demand the release of deported illegal alien MS-13 terrorist. The Democrats and the media in this room have continually and wrongly labeled Kilmar Abrego Garcia as a Maryland father. There is no Maryland father. Let me reiterate. Kilmar Abrego Garcia is an illegal alien, MS-13 gang member and foreign terrorist who was deported back to his home country. And when Kilmar Abrego Garcia was originally arrested, he was wearing a sweatshirt with rolls of money covering the ears, mouth, and eyes of presidents on various currency denominations. This is a known MS-13 gang symbol of hear no evil, speak no evil, see no evil. Abrego Garcia was also arrested with 2 other well-known members of the vicious MS-13 gang. And 2 separate judges found that Abrego Garcia was a member of MS-13, and that finding has never been disputed.
You know why they're doing this, right?
It was
this has nothing to do with him. This has to do with the Fed.
Abrego Garcia's wife petitioned for an order of protection against him for
this is a proxy to tell the Fed
in May of 2021. And here is the order right here. The court ordered that the respondent committed the following acts of abuse. Once in May of 2021, assault in any degree. And on May 4th of 2021, he punched and scratched his wife, ripped off her shirt, and grabbed and bruised her. This is from a court in Maryland. So not only are Democrats rushing to defend an illegal criminal foreign terrorist gang member, but also an apparent woman beater. To set all of that aside,
this is to challenge the Supreme Court for authority.
Inside our country and had a lawful deportation order made him subject to removal back to his home country of El Salvador. And if he ever ends up back in the United States, he would immediately be deported again. Nothing will change the fact that Abrego Garcia will never be a Maryland father. He will never live in the United States of America again. And the United States Supreme Court ruled unanimously
Spoo's weak.
The United States and the Secretary of State could not be compelled to forcibly retrieve this citizen of El Salvador who is currently locked up in a maximum security prison in his home country due to his MS-13 membership. To remind the media and the Democrat Party, MS-13 are among the most vicious and dangerous individuals in this world. They pose a direct threat to the United States, El Salvador, and any other country who maintains basic law and order. MS-13.
This is about the Supreme Court, not about this guy.
Trafficking operations.
Picking a fight on something they can easily win.
Law-abiding people.
That draws in the Supreme Court for the Fed.
That he will not be releasing this MS-13 gang member from his prison. But that is not enough. All of that is not enough to stop the Democrat Party from their lies. The number one issue they are focused on right now is bringing back this illegal alien terrorist to America. But where are the Democrats applauding the fact that southern border crossings just hit a historic low? Where are the Democrats supporting our brave men and women of law enforcement who are putting their lives on the line every single day to arrest the violent illegal alien invaders that the previous administration allowed into our country? And where are the Democrats when innocent Americans are victimized by illegal criminals that Joe Biden let in?
You pick a slam dunk argument for a different argument.
And the Democrats applauding his trip to El Salvador today are incapable of having any shred of common sense or empathy for their own constituents and our citizens. Nobody knows this more than the woman standing to my right, Patty Morin, whose beautiful daughter Rachel was brutally maimed and murdered at the hands of an illegal alien in August of 2023. Patty no longer has her daughter because of the—
This is all propaganda. This does not do with this guy.
And these are policies that President Trump is bringing an end to. Patty should not have to be here today, but she—
This is a fight with the Supreme Court right now.
For her willingness and her request to share her powerful story with the world. Thank you, Patty, for being here.
Thank you. A lot of you don't know the whole story about Rachel and about the crime that was committed against her. Even us, her family, we didn't know all the details. They kept most of it close to their chest, the detectives, because they didn't want to do anything to hurt the case. They wanted to keep the integrity of the case.
You see this stack right here? This is a big stack of you won't go up.
In her trial.
5,400 telling you no, you're not getting up here.
Upon layer of evidence against the accused. An illegal—
So the must close the week above 55. They're closing the door right now. You see it?
Well, maybe this might have happened. We didn't know, but when we were at the—
Show that to you right now.
Puzzle pieces. And I want to share some of those things with you. You know that Rachel's a 37-year-old mother. She has 5 children. We've walked the trail for the last 25 years that we've lived in Maryland. It's a safe place for our family. It's where we go to get a little bit of New England, because that's where we're from, New England. When she went on that trail that day, she was not planning on dying. She wasn't planning on walking to her death. She was planning on going to the grocery store with her girls afterwards. Victor Martinez, he waited for her. He waited for her to come closer. He saw her. He saw that there was nobody around. He attacked her. He dragged her 150 feet, blood gushing from her head. It left a 150-foot trail.
Yeah, see this right here?
Culverts.
See it clear as day, right?
He picked her up.
Trying to go higher, higher,
against
higher.
The wall of the tunnel.
See the island.
But before he did that—
as soon as the island broke down, failure to get back above the island, wham.
Still stained with her blood.
Now, we need to reject this island to get lower.
Against those rocks. They say at least 20 times they could count the cuts in her head. They said that when they did the autopsy, and I've seen the pictures, there's a 6-inch square in the back of her head where the skull is shattered the way that you would crush an eggshell.
Futures broke it.
3/4.
Futures broke the low on Friday.
Her right and left side of her face bashed in. Her beautiful face bashed in.
That's not good.
Her head bashed in.
You can see the tick right here.
Bones, fractures. He takes and he drags her some more. He drags her
I caught the low just below. That's bad.
thorn bushes. She has all the scrapes and cuts.
That's the little gremlins, right? The computers.
Didn't have some kind
no bueno.
of injury, whether it's bruising, broken bones, contusions, the scratches. She had a fractured rib. Fractured nose.
Yep, and the low here is on Thursday. So they broke the Friday low.
He takes her into the tunnel and he picks her up. He throws her against the wall. Blood is gushing from her head. Her hair is soaked in blood. And they showed us pictures of her body against the wall, the blood outlined her body, and you could see where the blood ran down around her as he was raping her. And then he threw her down.
So this is all open now.
And then he strangled her because he didn't want her to be able to live to tell the story. They said that when they did the autopsy on her neck, that one of the things they do is they open up the neck and they look to see how far the injury is. And they went all the way down as far as an injury is possible, hemorrhaging in the muscles, because of how strong and violent the grip was around her. These are the kind of people that have no compulsion. Like, to them, this is nothing. And when he was sitting in the courtroom, he actually looked like he thought he was going to.
The hourly looks good here.
There was no remorse on his face at all. This person took my daughter so violently and so gruesomely and so graphically that they sealed the pictures, because I don't want my granddaughters.
Let me check SPX really quick.
These are the kind of criminals President Trump wants to remove from our country.
Let me check SPX really quick, and let me check a few things here. I got to check some other charts.
We are American citizens. Why should we allow people like this, violent criminals that have no conscience at all, to murder our mothers, our sisters, our daughters? What? I don't understand why there's even any kind of problem with this.
I see the upside move right now, but the downside move is cloudy here.
Right, although I understand different parties have used it in the past. But we have to look at it as we are American citizens. We need to protect our families, our borders, our children.
SPY looks like shit. SPX looks good for a squeeze.
Well, I do, but
ES says up.
I want to preserve life. And that's the only reason why I have taken and spoken about Rachel all this time. If you're a mother here in the room, can you imagine standing there alive? You're alive, and someone comes and puts their...
And dude, like, market looks ready to rip, dude.
That's what it
NDX looks great.
feels like. A part of you is being ripped out of you. You can't even describe the pain. Just like you can't describe...
Is this like a bull trap, bear trap bullshit?
...carry a baby in your womb, or to feel those first kicks.
IWM looks good too. IWM looks a little bit weaker. But that should be expected if we have low liquidity and we're running into earnings season.
Why are we not protecting the American citizens? It's just common sense. Why are we not protecting our children?
I gotta check something else here. I gotta check some other shit.
A senator from
DIA looks horrible, but that's okay. Like DIA, IWM, it doesn't look as bad.
my daughter.
If we're funneling, we don't have low liquidity and we're sending money into NDX and SPY, like SPY looks
Her 5
neutral.
children,
NASDAQ looks baller.
and now a grandbaby.
IWM looks the worst, but of course you got tariffs and it's not their earnings season. DIA looks like it has more down to go,
To fly to El Salvador
but that's only because of liquidity
to bring back
and earnings season.
not even an American citizen. Why does that person
What does USD JPY look like?
than I do, or my daughter, or my grandchildren?
Oh, fuck.
I don't understand this.
USD JPY looking like crash material. So USD JPY,
And
the unwind comes at 130. If you don't know that, the unwind for the wrap trade for the market
the president and
is at 130 bucks, and we're trading 141. There should be a pump up here,
your request to share your daughter's
like a
story.
pump like this, but then down.
Here's you loud and clear, so thank you. Does anyone have any questions for Patty or for me?
There's something here where like
No. Anybody?
the market should go up.
The president will be at his dinner later this evening. Thank you.
Okay, so we're done. I thought this might.
Thank you.
I said there'd be a Q&A or something.
Thank you. Please tell the truth. Exactly. Tell the truth.
Yeah.
Tell
We got to talk about USDJPY here.
this is about protecting.
I'm going to turn this shit off. This has nothing. The only thing that's even relevant to this is I want you to understand this. If you don't understand it, Trump's trying to assert executive power over the courts, not just Supreme Court, but courts in general, and that includes the Fed. So roll her out, get you emotional, that kind of stuff, and then he's going to come out with the 1-2 punch. Right? He's going to bring up Jerome, not just Jerome, but other things. So that's all. That's the only takeaway I can get from this. That's it. So I'm going to turn her off. Be aware of Trump posting overnight. Now we got to look at something here together. Here's USDJPY. The unravel of this trade is down here at 130. We start an unwind. It's vicious, straight down to the depths of hell. Now, USDJPY, though, made a new low here. You can see the new low that they made, but it should squeeze to confirm the move. And you got the daily trigger coming down. So this would imply the market squeezes. Theoretically, if the market got high enough above the weekly candle, we could go higher. The market could go higher, but we're not there yet, so I don't know what to say to you on this. VIX has a similar pattern going on right now. Not this same pattern, but a similar setup where the VIX gets murdered or squeezes a little bit of overnight weakness, but then VIX gets murdered, and then it has the chance to jump. I'm not going to show you that chart here, but I looked at it earlier. So it's a tough call here. It really is. We have so much headline risk right now, and so much. I can't call it uncertainty because it's not uncertain. Right when you think they're done, that something crazy happens, right? And even J-Pow today is crazy. It's not like uncalled for or anything. It's just, the craziness just builds. So this market is set up for any outcome, in my view. I think that we can assign whatever we want after the move is done, but the market is set up for either of these moves. Now, I'll say this. This looks apparent in the overnight. Not only that, let me just check this one more time here. Like the half hour looks good. The hourly hasn't been confirmed. So on an hourly basis, let me go back to an hourly basis. It would look something like this. On an hourly basis, I think ES looks like up. They offer it up to Asia. Goes back down and then up. Like this. Up, or up, down, up. Into tomorrow. Now, the big decision is on this is, do we reject? And we need to know if we reject here or if we reject up here. And I do want to explain something that's important here. If you're going to take the short from where we are, I would say don't take it. I would say you're looking to short. Like if we reject this and get a new low, I'd be shorting 53.35.50. Or if we break above, I'd be waiting to short this one here. Now this is where you're short. I wouldn't be shorting futures right now. And we're not getting any headline risk at the moment. So it's probably higher. The bigger trade, though, the bigger trade here, like rather than getting cut up, right? Or we even if we were to reverse down, whoop, and then we're like back up again, right? There's no trade here, I don't think, in futures at the moment. You're looking to shorten this, shorten that, but the bigger trade is that violation of this yellow line right here. That's the bigger trade, because if you violate it, we haven't violated it yet. If we violate it, if we violate this, because this is 520, 5200 or 5225, and on SPX, and this is 5200 on SPX. If we violate this and go down, it opens a door for another 200 points to the downside, all the way down. So let me just let me scale out for you for a minute, just to show you like what the door opens. You can see it right here. There's a big gap down here. Sorry about these lines. There's another, not that far. It's right here. There's one more. I don't know why it's not showing up on this chart right now. I had it on the monthly trigger, but you're trading this right here basically. 4,600 on ES, I think. So I think that's where it was, and let me just check the monthly really quick. $48.56 would be the target. 48.56. So, but the key point behind this, the key point here is, I want you to scale out in your brain for a minute, and the most profitable part of the trade is this. And this is very, very profitable right here. This is probably your most profitable part of the trade, believe it or not. Because you come down here, you violate this, and then it slams straight down. And this is like big money. There's some big money in here too. There's like a leg right here. There's a leg right here. And there's gravy down here. And to be honest with you, this is where I'm at right now with futures. But I want to say that, so this is Thursday at 1600. And that would set up this down move to, believe it or not, like head down here over the 4 days. Target 4,800. Now, you have to be willing as a matter of fact, this would go even lower. This would hit, target would be 51.35. Yeah, and we wouldn't even bother with that. Well, I guess the target's here. Target is 4,900, but you got to think that if we reject it on the high, sorry, target is 49.14.25, but you got to understand that if we didn't peek our heads above, then that means that this low is invalid. That means that this low, we need to go lower than that to find where real support is. So the target is 49.15.25. But I would give it a high probability if we reject this today, tomorrow, that we're going to go right through it. We're going to blast right through it. And then what that does is sets us up for new lows to the downside. Now, saying that, downside momentum is not there. Jerome Powell is set up more downside momentum, panic basically. I would still be watching this extremely closely here. Like, this is a major inflection point. And when I draw these things, I'm not drawing them because, hey, this is where I think we go. I'm drawing them to watch. So, like, if I draw this, as a matter of fact, this should go higher. We're up there. So what that implies, right, we get the new high, implies we sweep the low and come back up over here. As a matter of fact, I think we're going to do this one like right here. High, swoop back up. Now this is where I left this lower because there's so much resistance here. Now what you want to be watching for is this. Watch me closely here. If you break above the hourly trigger, right, you settle back down right here, get back up here. If we fail it, remember you need the new low. And the reason I say that is because if you get the failure and then it pops its head up, and you get the new high, and you're looking lower, you need to change your opinion to go up like it never happened. Be willing to say, oh, shit, we are going up there. And then be willing to say we're going to hold 500 and head up and out of here. So this is a fluid situation, in my view. Where the market goes is fluid. If I was to tell you momentum only, we weren't going through all this Trump shit and White House shit and Jerome shit and fucking depression shit and all this other nonsense. Under normal circumstances, I would tell you that we're going to break higher because it didn't validate the 20. We're going to hold this and we're going to start going right back to the upside. But I can't make that call. And momentum says we're going up there. But there's too many unknowns right now. There's too much volatility. VIX is way too fucking high. Either of these outcomes are valid in my view. So you have to, like, trade it like a cowboy. Told you that in a brief on Monday, I believe. I said, I see this, but we could easily be doing this at any moment. So if we are doing that, you have to be able to hedge yourself. I gave you some solutions. I said, if you're bearish, you put on a bear ratio in case it goes against you. If you're bullish, you're like, hey, Cap, you're wrong. We're going up. You put on a bull ratio. So if you're incorrect and we blast down, you're going to get paid. If you're the bear and we go up, you're going to get break even or get paid, right? Doesn't really matter. So you can be right and wrong and not blow up your account. There are other ways to hedge this stuff. You can do it like I did some today. I bought a bunch of zero-date puts, made a bunch of money. I'm still under and fucked up, but I didn't get blown out. You can trade futures. If you're long market, you can sell futures. There's a bunch of different ways that you can be long and short. You don't have to be like, I'm just a bull, I'm just a bear, or whatever. I'm committed to this or committed to that outcome. So I'm going to give it to the bears for right now. It's up to the bulls to prove otherwise. It's up to bulls or buyers to prove sellers wrong. We reject this evening, and we're going to start heading down. If the buyers go up here, we'll go check this out, and we'll find out if the buyers are actually here or not. If this is a hit and run, maybe this is a function of expiration, or if this is real. And I'll tell you what, I was like, hey, I'm going to err a little bit on expiration today on this or tomorrow, but that Jerome shit today was no bueno. When you let like Main Street Bob in to the room, it's never good. It really isn't. Main Street Bob, you don't want to tell them anything like that, or you don't want Jerome telling him anything like that. They're worse than you and I being retailers. Like, they panic, especially older boomers. They went through 2008. They went through the year 2000. They don't want to hear it. I want to tell you guys something here. Now, we've lost some of this. We've lost this. No one talks about this anymore. But I got to tell you something. In the year 2000, no, 2008. I think it was 2008. I was like around the market, but not in the market. But I remember that traders at that time, like I was on Yahoo message boards, I was doing Bitcoin kind of shit. But I remember that traders on Yahoo message boards said they would never trust a bank again, ever, in their lifetime. They're still active right now, trading. Now, they have since allowed like JPM to go up and GS. They've forgotten. But I want you to know that those guys are likely being triggered hard right now. And they don't forget that stuff. It triggers old memories of never trust a bank. And they start telling people that. And then Jerome starts telling people that. That's what Jerome's doing today, is he's telling you not to trust the banks. That's what he's telling you. So I'm telling you, don't trust the administration. Don't trust the banks. They're sending us into a depression. That's what he told you. I don't care what anyone else says. That's what he told you. And that could create panic. And that's real. Panic is real. Real thing. It hasn't happened yet. We don't know how this gets addressed by the White House. We don't know how this gets addressed by the news. We don't know if they try to smooth it over. CNBC today definitely tried to smooth that shit over. They were like out with like pre-planned articles, pumping them out right as Jerome was speaking to AstroTurf, not freaking people out. That really happened today. I watched the headlines pop up in my feed as Jerome was speaking. That's real shit. You can't deny that shit. Barring no panic, we go up, baby. But then it brings in, like, this is how fucked up things are. It brings up, even if we squeeze to 62, you know, I'm not panicked, but I'm going to sell into you, right? I'll tell you everything is fine publicly. Tell my wife everything's fine. Tell my neighbor. Tell whoever. And even if we now trade that 62, it's an auto sell. Automatically. Auto sell. If before today, I was like, I don't know if we worn out those sellers yet. But today, that door is closed. Those guys are going to fucking sell if we ever get near 62. They are out. I assure you. I don't care who they are, what the politics are. They don't give a fuck. Anyone with real money, they're gone. Jerome said it today. He said it about investing and investments. It is going to scare the shit out of some people. Anyways, rant over. So, the market, in my view, is dynamic. It's very volatile. VIX is ripping, and VIX wants to explode to the upside, which, all else equal, means we can moon and we can fucking burn. All else equal in that situation. So, whatever the outcome, you need to be able to be at those inflection points and say, oh shit, we're losing the island. Or, oh shit, we're breaking out into the up, right, from that island. If you start losing the island, you immediately need to go, nope, we're going down. If you're like, hey, we're going to crash, and you start seeing us like just ripping up new highs, you need to either be able to close or counter your short or be able to take the long up with the trip. You have to, as a retailer. This is what banks do too. Retailers, you might not know that, but banks are long and short. You'll find some people with fucking brokerages with shit everywhere. Longs and shorts and fucking sideways trades. And they're adding and rolling. It's a fluid thing, and particularly right now. I don't think you can call it 100% in either direction. When volatility is low, even when we're rolling or pulling back, it's easier to be like, this is the highest probability outcome. So when you're in these situations, you have to remember a few rules. I think I talked about this in the weekend brief, which was trade the ranges big. Look for losing support and be able to flip bear. And if you start to see a squeeze, be able to go long. We went up 10, 12% last week. 10, 12%. You don't want to get blown out on sell side either. You need to be able to counter that trade. Very important as a trader in high volatility to be able to change your view with a drop of a dime. Or you don't belong in the market. There's not a place for you. You have to be able, at a drop of a hat, you have to have a plan and your thesis and be able to switch immediately. It's very critical in these markets like this. It was like this in COVID, especially when we made the turn higher. When we turned around on COVID, I was begging my friends to go with me. It was the bottom. We knew it was the bottom. And they just kept buying fucking puts at every inflection point. So I want to visualize that to you really quick. So on this trigger screen, it's kind of like, if we did something like this up here, and instead of rolling down to 500, we get a new high. And like right there is when my friends were like, no, bro, I'm loaded puts. How much? $500,000, bro. And they took every fucking dollar. So you have to be able to change your opinion, even in a high volatility environment. And I'm not trying to say we're going to break out of here at all. Just saying, be able to change your view in high volatility. We can make massive moves in either directions. At any rate, expectations. For now, for ES. Now remember, this is not cash market. Totally different chart. Trade is to the upside. They've already bought it. You can see the wick right here. Trade is to the upside. We're going to attempt to trade 53.35. Don't dick around in here. Do not dick around in here, long or short. Just take the trade up here. Should be able to go from here to here. And I wouldn't fuck around with that at all. If we get back into cash market, you want to know how high we got. If we got this high, you're going to expect a retrace in the morning, and then you're going to be looking for a high up here. If we fail in the overnight, fail that line right there, they'll send it back down, they'll tease cash market traders, and then start blasting us down. And they'll make a bunch of bag holders on Thursday, and we'll start heading to the downside. If in the middle of the night we get some kind of like bullshit Trump or whatever, we go up here, you're a seller in cash market tomorrow. That makes any sense to you guys at all? I don't know. If you don't know what I'm talking about, then you have no business trading with real money. Keep learning, and one day you'll be ready. Now, that back over there. If you're not long futures right now, the trades for you is to buy this 52 if you get a chance between now and 9 p.m. 52.65 if this gets offered up to Asia and they buy it. If you don't have the trade right now and you're kind of diddling in the middle at 6 p.m. or whatever, wait for the trade higher to take the short instead. Either there or there to the downside. Expectations into Thursday. Failure. 54.04 looking lower. Bulls and buyers would need to show me a new high on 53.35. and a new high above 5,400, regain 5,400 for me to take the stance that we're going to go trade that 5,600. Momentum is on bull's side to do that, but the uncertainty is stupid. Absolutely fucking stupid right now. And unless we get an answer from, I don't know, Trump, I don't even think Besson can do it. I think at this point, the ball is firmly in Trump's court. Not a good look today. Not a good look. And that's all I got for you guys. You guys have any questions or no? No, these are ICT. ICT. I have this tool, an ICT tool here that I adapted for myself. I'm trying to get it to you guys. I have to add a couple more things to it. David AMS was going to help me add some more shit to it. And I'll try to get, I've been trying to get this to you, but it's not finished yet. So I gotta make time with David. I'm just stretched so thin right now. It's I'm fighting fires everywhere. And my health is fucked up. I want to tell you guys something really quick between you and I. Hopefully there's not too public right now. I haven't disclosed this publicly. I think I might have mentioned it once before, but I'm getting older. So I'm trying to I'm not 50 years old, and they're trying to I'm trying to get tests done, and they didn't want to give them to me. I've been through this odyssey for a year to 3 years now, and my health is deteriorating. I had a scare this week. On Monday morning, I had an appointment in the morning for the doctor, and my regular doctor. And then I was going to come back home and do a private stream and teach you guys some stuff, and for the community. And I was rushed to the emergency room. They had my wife. Well, they was either going to get an ambulance, or my wife had to come pick me up and drive me to the emergency room. I sat in a hospital all day long until about 6 or 7 at night on Monday, and they thought I was doing damage to my organs, like permanent damage, when I was in this doctor's office. So I got a lot going on, like background stuff. I don't tell you guys about that stuff. So I'm like, hey, why isn't he here? What's he doing? Where's he gone? What's he doing? That kind of stuff. That's what's happening. So I got some medical issues, and I'm trying to work through them and deal with them. And it's been a fucking fight the entire fucking way. So when you guys why is he so stressed out? Because I have to take my own agency, and I have Cadillac insurance. I have fucking bomber insurance. I was in the emergency room. They put me in a rich person's emergency room. And it still doesn't matter. These fuckers, trying to get anything done with these fucking doctors. Ugh. It's so bad. When you tell them this is happening and that's happening, and they're like, no, that's not happening. I'm like, I'm telling you, this is going on. And I'm my own whatever it's called, my own mortality is facing me real time. And I got kids. So I got to make sure I'm okay. Anyways, no more talking about that shit. So if you're where'd he go or something like that, Monday, because I got shit going on, and it's not something planned. So that's what's going on. Anyways, I'll see you guys tomorrow. And if anything happens in the overnight, I'll be here for you and with you. If you see any blooding, I'll show you this really quick. Goddamn crying on the goddamn stream. If you begin to see anything like this in the overnight, I will be on with you. You see a drop down, new low, any kind of panic in the overnight, I'll be here to trade this with you, and we'll take it level by level by level all the way down. And I promise you this through all of this. It's been very orderly. But if it gets out of control, a crazy town, or anything like that, oh, thank you, Dan. You don't have to do that, man. It's total fucking BS, bro. So fucking furious. Ugh. If anything happens in the overnight, I'll be here. You guys have a great night. I'll talk to you.